My dear friends, we have started with a topic called insurance claims. In our lecture number 1, our first topic is insurance claims. I have already told you the reasoning behind why I am started with insurance claims. It is because less of accounts, less of legal issues, more of common sense, a little bit of mathematics. So let us proceed into this particular topic called insurance claims. Sorry. When I give this particular insurance, if I give and the claims you should tell. You can fight the sleep. I always believe if you open your mouth, there are 2 advantages. Even if you sit in the classroom or sit at your place, normal place, please try to open your mouth and spell out. Absolutely don't worry about the environment. Your people making fun of you, your environment is making fun of you, doesn't matter, because when you open your mouth and spell out, 2 things will happen. 1, little bit of drowsiness naturally that comes along when somebody is speaking for this. See, I understand your pain and all, pa. If I sit and hear my lecture for 15 minutes, I will get a good sleep. So I can understand that. So thereby I can't always tell you, no, listen, open your mouth. But when somebody open their mouth, some reaction is happening, kinetic moments are happening, so it doesn't go. Otherwise, what will happen? Like this, you're sitting, pa. Then it is like, you are not sleeping actually, you're not sleeping. But when you're not doing anything and doing like this, it's like a computer. Operations, it doesn't happen. What will happen? It go to screensaver mode. No, computer is not off. Nothing is working. So like that screensaver mode, you should not do. Upon screensaver mode, it is going. Now some shaking of the mouse and all you do, it will come to active mode. No, like that, open your mouth, spell out. You can definitely fight the sleep, or that little bit of drowsiness that comes to you, that will go away. You need not do big, open your mouth means what? Like if I give the blank, if I convey a statement, same statement once again I am telling, I give you a blank, open your mouth, spell out, please, number 1. Number 2, statements, wordings, register in your mind only when you open your mouth and spell out. I imagine I take 2 persons here and I am giving a phone number, and one person I am telling like both the person now memorize this number and repeat. Imagine one person simply seeing the number and trying to memorize. Another person opening his mouth and spelling out 9412 402331, like that, opening mouth. Who will learn fast? The person who spell the number, and through that registering, it will immediately comes fast. So thereby, an effective way of registering in our mind is opening the mouth and spelling out. So simply seeing, sir, I am professional, sir, I am disciplined, sir. So thereby, I only simply will hear. So I want students to know when they read something book, and if they want to understand as well as at the same time effectively register, open the mouth and spell out. There will be subjects like theory subjects, IT and SM and all. Open the mouth and spell out, shout at the top of your voice. At a young age, we learned like that. Then why don't you practice even now? Why do you want to break the rules now? Telling that no discipline, sir, I am grown up child. So what? Whatever success or whatever factors gave you success at a young age, practice even at the adult age also, no problem. So therefore, open your mouth, spell out. So do you expect the mantras and Vedas, if you want to get the energy and power, see, you tell mantras and Vedas, you don't get energy and power. You just open your mouth, spell out, then the energy will flow. I already motivated enough to you. So lecture is going to commence. So every 5 minutes when I do the recap, join me in the repetition, my dear friends. So every time I may not tell, but most of the times I will ensure I am telling that also. Please repeat along with me. So which chapter we are going to learn? Insurance claims. Open your mouth, tell. Okay, insurance claims. My dear friends, the first question usually starts with this: what is insurance? Question A: what is insurance? questions would be posted. Imagine 10 students have answered differently. I will now act like students only. Sir, insurance means protection against risk. Usual answers I used to get from the students, like protection against risk, sir, safeguarding of our assets, properties. So that is what the basic concept of insurance, like that. No, several answers we will receive. Compensation we will get for the losses, etc. and all, like that we will get. So please do understand. Definitely insurance claims as a chapter, I don't know, you would not have learned, some would have learned, but that word insurance everybody should, you will be aware of. So please do understand, it's a contract. It's a contract. Insurance means it is a contract. About contract there will be two person, no, contractor, contractee. So here the two parties will be, one is the insurer, the other one is insured. The two parties will be called as insurer and insured. Let us visualize. Insurer means insurance company. Insurer means insurance company. Insured means the business enterprise. We always learn accounting from the perspective of business enterprise. We don't learn accounting from a household viewpoint. Sir, I had a TV in my home and the TV insured. So, adu lost, damaged, so what is the insurance? Like that we don't learn from a household viewpoint, my dear friends. We learn only from the viewpoint of business entities. Okay. So, that way insurance is a contract between insurer, within bracket insurance company, and insured, business entity, business enterprise. Okay. What sort of contract now? Through which the insurer, the insurance company, agrees to compensate the loss suffered by the insured in return of consideration called premium. In return of consideration called premium. So, which means this insured businessman gives a small amount, fill an application form or fill a form, proper form, pay money, and that is actually now becomes a contract through which the insurer says that when you incur the loss, we will compensate you. So that is the basic concept of insurance. Indemnification contract. So straight away I could have used this particular word, but we wanted to learn like a layman, a simple common man. Indemnification of loss, making good the loss. Like that we can tell, taking various other terms also like subrogation, various other terminologies. I don't want to bring those the technical wordings here. It's just that if I have entered into this contract and when I am getting a loss, that particular loss will be compensated, is what we are understanding as a concept of insurance. Now, if this is not there, what will happen? Suppose I start a business. I take a lot of hard work and I improve the business, and the business have grown such a high, and I create a lot of properties. For 30 years I did business, I create a lot of properties. Imagine an earthquake comes or some other event happens and all my properties lost. All my properties destroyed. About 30 years I created wealth, either natural calamity or some natural calamity or some other events, abnormal events happens and I lose all my wealth. So then naturally I will be going mad. I will immediately become like, I will then start speaking about like, the ideology, the spirituality and all. I will tell the logame maya, nothing is permanent, materialistic world is maya. Like that I will start speaking and I will become sannyasi. In fact, for that matter, every businessman will become sannyasi. There won't be business. I told you business is must, correct? So there should be definitely you need the motivation to do business. I am ready to incur loss because of my fault. I am ready to incur business losses. But the factors beyond my control giving me loss, then I won't do business. This concept will take care of that particular part. When you are getting loss because of factors beyond your control, then that losses will be compensated. That losses will be compensated. Like that, when you are having the guarantee, appo definitely with a lot of motivation you can do business, correct appa? Then you need to face only business risk, you need not face the various others risk like the natural calamity or abnormal events, so you need not be really concerned with, worried about, correct? Suppose because of this concept of insurance we are having less sannyasis. So otherwise we would have had entire all the people would have turned, everybody will give messages. Today only few are giving messages, few are only giving advices, speaking about this spiritual messages. Otherwise all will start speaking logame maye, all these things would have come. Anyway, coming back to this issue now, it is a contract whereby insurer, who is the insurer? Insurance company agrees to compensate the loss suffered by the insured. Who is the insured? Normal business, and any type of business they are doing, business enterprise. What consideration we will give? Premium. Okay, listen carefully my dear friends. This premium will be very less, sir. Some students, let that be very clear. Sir, insurance company collecting money and giving back same money na, then he himself is having money, no, why I should give to insurance company and get it back? People will get that doubt. Sir, many are understanding. Many people, sir, what you are explaining, I know all these concepts and all. Some laymen will be there, my dear friends. So, I give money, I get back money when I am getting the loss. Now, why is that I should give money? I should have put into some bank account. No. I pay 1,000 rupees. I get a cover for around 5 lakhs rupees or 10 lakhs rupees, etc. So, please do understand, what I am losing is only how much? 1,000 rupees or maybe some 5,000 rupees. I take insurance coverage for a amount by paying 5,000 rupees. I get a coverage for 5 lakhs, which means if some fire accident comes, some other damages happens, and thereby I lose 5 lakhs, insurance company will give me 5 lakhs. But I paid only 5,000 rupees. By I paying 5,000 rupees, I am getting a compensation for how much? 5 lakhs. Appo super, you understand? Then for businessman, it is advantage or not advantage? Advantage. Appo you will tell, sir, then that insurance company, how sir, collecting 5,000 rupees, giving 5 lakhs na, appo whoever doing insurance company business, they will lose everything, no sir? Please understand my dear friends, insurance company will collect that 5,000 rupees from 10,000 people. There will be so many business people spread across, no? So insurance company will collect that 5,000 rupees from 10,000 people. Imagine 1 lakh people only will collect, will be having 1 lakh customers, etc. Sorry, or minimum or 10,000 people. So listen carefully my dear friends, I am collecting how much rupees? 5,000 rupees. From how many people? 10,000. Appo you find my dear friends, how much amount it is? 5 crores. 5 crores, 500 lakhs. If insurance company collected 500 lakhs, and suppose out of this 10,000 people, some it is not like the abnormal event happens to all the 10,000 people, so it is going to happen for some 8 to 10% abdina. So 10 people we are giving 5 lakhs, about 50 lakhs we give. Insurance company ki 500 lakhs 50 lakhs outflow, 450 lakhs what in net income. So it is a win for insurance company also, it is a win for businessman also. But do you mean to say, if the insurance company collect 5,000 and they are not having any fire accident, should I give back 5,000? No, I need not give this 5,000 rupees. Up a businessman viewpoint, I gave 5,000 rupees as premium, no, I paid 5,000 rupees premium. What is my coverage? What is the compensation they are promising? 5 lakhs. If I am incurring the loss, suppose I am not incurring the loss, whatever I paid as 5,000 rupees, that is gone. But I am ready to incur the loss of 5,000 rupees so that I need not worry about a loss for 5 lakhs. I can simply focus on my business. I hope you understand this. So thereby, it's a win-win strategy. So insurance company can gain all the business people, it is a gain only. I hope you are understanding. So that way, please you understand my dear friends. Insurance is a contract whereby insurance insured, within bracket I will write insurance company agrees to compensate the loss suffered by the insurer. Who is that? Insurer. Insured. Suffered by the insured. 2% no. Insurer. Insured. Insured. Who is that person insured? Business enterprise. So it is a contract whereby insurer. I am sorry. Insurer. Whereby insurance company agrees to compensate the loss suffered by the insured business enterprise in return of consideration called a premium. So that if Mr. B paying 5,000 rupees and it has been mentioned that 5 lakhs coverage now, what does it mean? If I am incurring a loss of 5 lakhs, they will be compensating me 5 lakhs. So if I am getting a loss of 2,000 rupees now, they will be compensating me only 2,000 rupees. If I don't get any loss now, then for me the 5,000 poach, gone. It is a loss. It's okay, no problem. Correct? This is how we are understanding the basic concept of this particular insurance. I hope you understand. So if in the definition I have written a definition, basic meaning we have written. For how many marks this question will come? It will come for no marks. It won't come for any marks, but more understanding we have written this. So don't expect like this meaning and all will come, theory and all will come. But to start with an understanding, we should know what is insurance and all. So people will know. I will tell you, my dear friends, there are some students or CBSE, maybe like some 90 to 100 they secured. Casual they will be sitting for. Please, my dear friends, that students I am telling, from my experience I am telling, my dear friends, so have a good liking towards writing. Whatever written you please write. Don't be that particular lazy. That mindset don't have. I had and I suffered, my dear friends. So write. So whatever in a structured form. Tomorrow your notebook should have an introduction. Your notebook should have the entire discussions. At that time again viewing the lecture not possible. So I want you to write, my dear friends. So please have a good liking towards writing. Please don't be lazy. Don't be too casual. The present generation, I'm just noticing that too casual, impatient. I'm not telling all. There are some will be disciplined. They are smart. I am not actually blaming the present gen fully and all. So, but they are very smart, my dear friends. But I want them to do the basic things that are necessary considering the examination requirements. So that is how we just now started our discussion with understanding what is insurance. I hope by the meaning of insurance you understand the process of insurance also, correct? So who initiate? So on the businessman, go to insurance company, get the form, fill the form, give the form, also pay premium. Insurance company collect these two promises. Now I promise you, whenever if you get this loss, I will pay you. This is the concept of insurance, right? Okay. Now my dear friends, this particular insurance my dear friends, we have, it's a very big ocean. The field or the industry of insurance is a very big ocean, I would say. It's a wide field, wide subject, insurance. It is broadly, we classify this insurance sector into life and general. Insurance sector we classify into life and general insurance, and the life insurance, very appropriate term for life should be life assurance. Why is it said life assurance and general insurance? It is because In general insurance, my dear friends, what happens is that I told you the compensation of the loss and all, compensation of loss, though coverage is for 5 lakhs, but if I lost only 3 lakhs, how much they will give me? 3 lakhs. If I lose 2 lakhs, they will give me 2 lakhs. If I lost 4 lakhs, 4 lakhs. Subject to what is totally covered. Correct, Appa? Okay. But in life assurance, it can't happen like this. I assure my life. And in the life lost, I am gone, deceased. Abhina, my family members will get money. But insurance company at that time, or my family members, or the insurance company can't tell the value of this particular life is 5,000 rupees, 25,000 rupees. That person life 5 crore. Like that, insurance company can't measure the value of life. Correct, Appa? So, just because he is so and so person, life, value of life this much, like that we can't measure. Appo life insurance, what is the compensation? Life lost. What is the compensation? Promised amount will be compensated. It is not the value of life is measured. Promised amount is compensated, which is called as assured amount. Assurance. Assured amount will be compensated. Correct, Appa? That is why we call it as life assurance rather than life insurance. Correct? Even though it is interchangeable words only, but appropriately it should be called as life assurance. Okay, anyway, coming back here, my dear friends, here it is general insurance. Insurance indemnify actual loss suffered. Coverage is 5 lakhs, but you will not be compensated more than your actual loss. Sir, I covered my car, I took a car insurance. Car insurance, I drove, or we know not, in Chennai I am driving now. First of all, you should know good driving. Even if you don't know driving also, no problem. Only thing is, you should be ready to face the heat of two-wheelers and our auto walas. In fact, I myself know most of the times I will drive only in two-wheeler and all. We go very close to the car only. We'll give so much of heartbreaking to that, the car owners, etc. That is how we'll be using the two-wheelers, etc. No, small scratch and all we can make. So much of happiness abundant. Only when it is happening to our car only we'll understand the feeling. But when we cause, no, other happiness. Anyway, that is different matter, my dear friends. Coming back to this. If I lost only 10,000 rupees, then my compensation will be how much? Only 10,000 rupees. Even though coverage is for 5 lakhs, I will be getting only compensation of 10,000. That is what we call it as the indemnification of loss, and that is how general insurance is working, correct? So this general insurance broadly classified into fire insurance, marine insurance, then miscellaneous or others. Is now the broad structure in which the insurance is classified. General insurance into fire, marine, others. When you see others, my dear friends, it is like so many types. Burglary insurance, the car insurance, the bike insurance, the health insurance. Like that you have various types of insurance. You know, Shane Warne, who insured the spinning finger. So there are musicians, the celebrities, I mean the singers and all, who insure their throat alone. I also intend to insure my throat also, because lecture, no. But I feel like, when they ask me to speak and all, I don't know. This voice and all, they insure and all. Anyway, coming back to this, the point is there are different types of insurance. The point is, it's a very, very widened sector. I mean, the chapter is going to be very big chapter, no? Because in this chapter called insurance claims, we don't going to learn anything about life insurance. Under general insurance, so which means we are going to learn only what? General insurance. We are going to learn only general insurance. The general insurance, like we are not going to learn anything about marine insurance. We are not going to learn any other type of insurance. So our topic is confined only to what? Fire insurance. Our topic is confined to what? Fire insurance. Just fire insurance. I hope you are understanding this. Okay, listen carefully, my dear friends. So, insurance, I told you, it's a very, very wider concept, wider topic. But our syllabus confines only to what? Fire insurance. Okay. Now, listen carefully, my dear friends. So, on the ocean, when I say only general insurance, it becomes like a river. Adalendo I told you we are going to take only fire insurance. Now, this particular river is becoming like a pond. This much only we are going to learn. Or pond or well, that much only we are going to learn. Ocean or nalo, our syllabus in the topic is very simple. I am telling. Small topic is what we are going to learn. Now listen carefully, my dear friends. You know there are two parties here, no? Who are the two parties? Insurer, insured. Insurer, insured. Primarily, we are not going to learn from the perspective of insurer. We are going to learn from the viewpoint of insured. What is that, sir? We are going to learn from the viewpoint of insured. My dear friends, we are going to learn from the viewpoint of insured the amount of claim. So please understand that I told you procedure for the insurance concept, that we make the form, we make the contract, we pay the premium, etc. Now suppose I took a fire insurance policy. Yes sir, you took fire insurance policy. Under this fire insurance policy, if I suffer some loss due to fire accident, insurance company will compensate me. There was a fire accident in my place. So insurance company will not be like, no, they will get a seventh sense information that I had a fire accident. So next day they won't come with a suitcase, take your compensation, it won't happen. When I had a fire accident, I should tell the insurance company that we had a fire accident in my place, and I need to. So who will determine the claim amount? Who should tell how much is the last amount? Insurance company or businessman? You should think about. Who will decide what is the amount of loss? Common sense, think pannunga. Who is going to make the payment? Insurance company. Appo who should tell what is the amount of payment? Insurance company. Generally we think that the claim is determined by insurance company. Actually no. The claim is determined by whom? The businessman. See, when insurance company comes to me, I told we have fire accident. They are coming and they can't tell, oh you lost 2 lakhs, get 2 lakhs. Like that, no, they can't give me some amount. When they are coming, they can see only ashes. With the quantum of ashes, they can't tell, oh this is what you have lost in. I should only tell, this is what I had, fire accident, this is what I have lost, so I want this much amount. Now I will tell. You can verify the claim and you can recalculate, etc. But basic how much I lost in, who should tell? Insured should tell. Now we are going to learn how the insured should make the calculation and make a claim to the insurance company is what primarily we are learning. Now well abdina, that much also we are not learning. We are not at all going to discuss anything from the viewpoint of the insurance company. Earlier in group 2 we have a chapter called insurance company accounts. Now even that particular chapter got removed. Throughout accounting, advanced accounting, we are going to learn how to make this particular claim alone, my dear friends, from the viewpoint of the businessman. Insured, understood? Sorry, about that is what we are going to learn, my dear friends. It's only a bucket of water that we are learning. Ocean become river, river become well, we are taking only a bucket of water. This much only our syllabus. Sorry. Now, we told you how to compute claim. How to compute claim from the viewpoint of insured. From the viewpoint of insured. In a dash policy, fire insurance policy, in a fire insurance policy, is now we are going to learn. Sir, fire accident happened. What and all I will be having loss, sir? What sort of loss I will have due to fire accident? My dear friends, what happens? Maybe like due to fire accident, I may lose my building, machinery, vehicle, furnitures, computer. Then the goods what I am dealing in, like that there will be so much of loss. There will be like loss of human life also. Correct? Here, even though you have different types of losses, our syllabus confines only to loss of stock. And one more loss is loss of profit. So our topic is going to confine only to loss of stock and loss of profit. Even though there will be many other type of losses due to fire accident, Our syllabus confines only to loss of stock and loss of. அப்போ அந்த பக்கெட்லேருந்து ஒரு பாட்டில் ஆஃப் வாட்டர் தான் we are going to learn. Ocean, insurance, life, general, no life, only general, general, fire, marine, others, only fire, insured, only from the viewpoint of insured. How to make the claim for loss. What type of loss? Only two type of loss, loss of stock, loss of profit. So with this discussion, I have spent 15-20 minutes here just to make you understand what are we going to learn in this chapter. Straight away I could have told in 1 single minute also. In this chapter, this is what we are going to learn. Other story we have told. So listen carefully, my dear friends. Now we are fixing the learning objective. In this chapter, what are we going to learn? In this chapter of insurance claims, what are we going to learn? We are going to learn computation of claim for loss of stock and loss of profit. This chapter we are going to learn these two things: computation of claim for loss of stock and loss of profit in a fire insurance policy. From the viewpoint of insured. So our class will be very slow paced manner. My dear friends, this lecture when it is for 180 hours, 190 hours, might sometimes if it is in this slow paced manner it goes to 200 hours also. It is catering to a very average student level, and when you find that very slow, the technology is such that you can hear this lecture in 1.25 speed, 1.5 speed and all. So when you hear this lecture, naturally the time will be reduced. You feel like sir, my grasp is slightly higher. So in a normal classroom like this we can't do, for one set of students I am doing fast, one set of students I am working slow motion. It doesn't happen. So it happens in the technology aided classroom, so that this is all various advantages. So students who are feeling it very slow, you can switch off to speed 1.25, so that then I will be slightly more active and all. So you can just see that particular environment. It's an advantage. I just sharing you, because some students are not aware of this particular concept until they complete a recorded hearing of recorded lecture. You should be aware of that concept. So it is a computation of claim for loss of stock and loss of profit in a fire insurance policy from the viewpoint of insured. So from ocean we have brought into a bottle of water. Bottle like this only we will show. So you should not misunderstand any other type of bottle. Normal bottle like this one, flask, you can understand. So you should not visualize anything else. Whatever I speak, it might appears to be having a second meaning to it, but for me I don't know double meanings etc and all, or a very innocent heart. So thereby think only in a normal manner. I don't have any other intention behind the statements whatever I make. So don't make me also corrupt, and also understand I don't convey any other corrupted statements. Okay, now proceeding further, my dear friends. So finally we have concluded on to what? The learning objective. So lecture number 1, our classroom number 1, first topic we are learning which chapter? Insurance claims. I told you what is insurance, how the modus operandi of the concept of insurance. See, all these things may not be elaborately discussed in the level the module, but there will be people who are still not aware of how the insurance concept is working and all. So you make a very nominal amount called premium. We get a big coverage, so that businessman is quite happy that he need not be worried about this abnormal events and losses. Insurance company ki like that, small money, small drops in the ocean, no. Small money will be collected from so many people, and they will compensate few people who are actually suffering the loss. Insurance company kum gain, businessman kum gain is how you should be understanding, right? It's just pooling of money and diversification of risk. That's the basic concept of insurance. Two parties, insurer, insured. Insurer na who comes to your mind? Insurance companies. Insured na who comes to your mind? Business enterprise. Like that we understood. So premium paid, promise is made, compensation will be made if the loss is suffered. How much will be compensation? Actual loss. Actual loss subject to the overall coverage. Suppose I covered for a 5 lakhs, but I incur 6 lakhs na, I'll be getting compensation only for how much? 5 lakhs. Actual loss will be compensated, but other some discussions and all we have. Anyway, other we are going to learn. That is what we are going to learn. So computation of claim. What is actual claim amount we can calculate is what we are going to learn. Shall we proceed further? Yes. Okay. We are going to focus on learning. So hardly like another half an hour only left. So I won't take again a big taxing session and all. Maybe I will continue another lecture, but it will be like maximum 2.5 hours lecture. First lecture in a face-to-face, no. People who are happy because I leave them little early and all. We'll take only 2 or 15 minutes and all. Lecture only 2 hours lecture or 2 or 15 minutes lecture, but just having an online lecture. Close to 2.5 hours every lecture we will be planning. Okay, anyway, coming back to this, our discussion today we are going to start with claim for loss of stock. I have already told you that who should tell the amount of claim? How much is the claim? Who should tell? Insurance company or insured? Final settlement amount determination can be done by the insurance company. But initially, who should tell the amount that this is the amount I have lost? It should be conveyed by the insured. Correct? Appo, procedure wise, I took a policy, insurance policy. I paid what? Premium. They gave me the promise. That's all. Now there is a fire accident in my place. Now what I should do? I should tell the insurance company about the fire accident, and they are coming. When they are coming, they will tell how much I lost, or I should tell. Who should tell? Businessman should tell. Correct? Insurance company will not tell what you lost. They don't know what I had. So they were not in my business place. I only was there in the business place. Correct? So we are going to discuss about loss of stock. I should now tell how much stock I have lost. Correct? Can I tell some number which I like the most? So they are asking how much you lost, how much stock you lost. I am telling I lost 5 crore rupees. Can I tell some number? I can't blabber some number. I should support it. I may like different numbers, 1,000, 2,000 lakhs, like that different numbers. Some people will like 143 as a number. I don't know why they are liking 143. Anyway, that is coming back to income tax section. One section is there. That section they are liking is what I am telling. Anyway, coming back to this, my dear friends. So I should have some supporting evidence, documents, or some calculations to tell that what I have lost. If I say a number like 3,60,000 is what I have lost, I should have some evidence to demonstrate to them, prove to them that this is the amount I have lost. Now how do I tell I have lost stock worth rupees 3,60,000? I should prove them that is the stock I had before the fire. So to tell that this is what I have lost, first I should prove just before the fire I had this much stock. Correct? Common sense are useful. Let's think like common sense, because this is a class. I don't want to straight away step number 1 ratio, step 2 trading account. That is not this class. Then that type of class means what? Straight away trading account, ratio. Then it is like some blind approach. I don't want you to do like that. I want you to understand the procedure, common sense. I already explained the process of insurance. Now I am telling you first I should tell the number, further I should prove now how much stock I had on the date of fire. Just before the fire, how much stock I had. If I can prove that, they will accept that is what I have lost. Correct, Appa? Okay, it is correct. Now, how do I prove this is a stock I had? For that, I need some evidence. My dear friends, you will tell, if I ask you, sir, take from accounting records, sir. Take the accounting records, give it to them, so that you can easily prove how much stock you had. You can easily show the purchase invoices. These are the purchases you had, sir. This is the sales you had. So, you can get the information. No, correct? So, easily you can prove. Please understand, my dear friends, it's not that easy. Why, sir, it is not easy? You will have stock sheet, you will have stock records, etc. See, if I have all those stock sheets, documents, etc., you are correct. I can straight away show them, this is the stock I had. See, the stock sheet, everyday inflow, outflow stock, this is the stock I had, and I can easily prove. But fire accident, no. Fire in my place will not destroy only stock. Fire is not like what you see in a Hollywood movie, like a wind, fire, anything goes in a particular direction. Fire comes, this is accounts department, let us go to stock department. Like that, fire will not travel. Fire destroyed everything, including what? Accounting records. I don't have even accounting records also to demonstrate this is a stock I had on the date of fire. What to do, sir? I have to tell them this is the stock I have lost by fire. Adhika I should tell this is the stock I had before the fire. How to tell? How do you think? Let us prepare some statements, accounting statements, so that through the statement we can arrive at the value of stock. Now, little bit of accounting sense is required, common sense is required. So, when I analyze various accounting statements like trial balance, BRS, these are accounting statements now. Trading account, P&L account are statements, they are not accounts. Though we call it trading account, they are statement. Balance sheet, like the different accounting statements we have now. Which statements will have stock into it? Stock into it, if I analyze. BRS, the stock will be there. Bank reconciliation statement, no. Trial balance will have stock. Sir, opening stock will be there. Trial balance as on, if I say trial balance as on 31st March 2020, in this generally what stock I will have? 1419 stock I will be having. 31320 stock will be outside the trial balance. Upon trial balance will not have that stock. Which stock sir I will be having? I mean, which statement sir I will be having that stock into it? Now, one statement is trading account. Another statement is balance sheet. My dear friends, in this trading account, if I can, usually trading account items, my dear friends, opening stock, purchases, sales, closing stock, gross profit, purchase related expense also imagine considered. Balance sheet will have what? Various assets. You will have asset 1, asset 2, you will have some 10 to 12 different categories of assets. You have liability 1, so many liabilities. Either a particular item that you have stock also as an asset. You have owner's fund, capital, profits, etc. This is how balance sheet is made up of. Balance sheet consists of assets and liabilities. Trading account consists of this item. In both the statements, if I can determine all other numbers, then in the statement, say accounting base, anything that you prepare, both the sides or the total should be tallying, equal. If you can take all other numbers, in the closing stock can be arrived as balancing figure. Closing stock can be arrived as balance sheet. If you can arrive at asset 1, 2, 3, 4, 5, 6, asset 10 information, all information I have now, liabilities, all information I have now, stock can be arrived as balancing figure. Easy work, sir. Either you prepare any of these two statements, take all other information and takkunu you can arrive stock as balancing figure. Correct appa? Sir, easier you told that, but all other information not available, sir. Every information not available. Now you have to search and find, take efforts to find out other information. We have to take efforts to find out other information. Where we get? Seri, appo definitely one thing is sure. Other information we need efforts. Seri. Appo, I, by using common sense, now should decide, should I search in the trading account information or balance sheet information? Anyway, in both the place I will get same amount or no? I will prefer which statement, whichever requires less efforts or more efforts. Which I will prefer? Less or more? Less efforts. Which statement have less information? Trading account is a statement I have less information. Thereby, because this straight away, no, I mean study module doesn't discuss, classroom doesn't discuss this. So even though balance sheet is also another source for me to find out the closing stock, but I don't prefer this because it has got so many lot-to-lot information. And I need to take so much of efforts to find out those information. So instead, I prefer what? In this one of the information is profit information also. We need profit information. Anyway, we require again trading and P&L. Trading P&L complete means now you can find out profit information. Correct? Instead, straight away we can go for preparing what? Trading account. So that way we prefer this trading account. And we take efforts to get information about opening stock, purchases, sales and gross profit. So when we say purchase, including purchase related expenses, or we call it as direct expenses. So like that we will be preparing. This accounting sense is involved. Now if you analyze common sense, sir, you only told common sense, I was hearing like common sense. What is common sense here? Please you understand. Opening stock plus purchases. You know what is this? Opening stock plus purchases. Now, it's not total goods available in one shop. Opening stock plus during the year purchases is the total goods available in the shop. From this, if you deduct the goods which has been already sold. But only thing is, this will be at one price, which is cost price. If you directly take sales amount, it is at selling price, no. So it is two different amount, price it should not be there. Suppose we convert this into cost price of goods sold. What is cost price of goods sold? Sales minus profit. Sales minus profit will give you cost price of goods sold. That if you deduct, naturally you will be getting what? Closing stock. Common sense. Sir, at the year beginning, when I commenced the business, I had 100 units. Units if you discuss. Then I purchased 2000 units. Totally how much I have? 100 I had. 2000 I purchased. Total how much I have? 2100. I sold 1800 units. About how many I have? 300. And the common sense. Opening stock plus purchase means what? Total goods available for sales. From the total goods, if you deduct the sales, you will get naturally what? Closing stock. Understood? Whatever unsold goods you will be getting. Is it common sense? No. This common sense we have constructed as a trading account. Opening stock plus purchases. Sales minus profit. Instead of deducting from this side, it is getting added to this side. But naturally, opening stock plus purchases plus profit minus sales will give you closing stock. That is how this particular trading account is constructed. So, we will not compel you to prepare trading account. If a student is comfortable with this statement type of approach, no problem, they can do it. Because in study module, in few questions they have done like the statement type now. Few questions they have prepared trading account. So, it's not like no rigid. See, accounts is like an art. It's a language of accounts. I mean, language of business accounts. So, you should do like this only, like that and all. We can't speak. Maybe when you started learning in 11th and 12th, you felt like science, because if you are not written DR, CR, then teacher will use the wooden scale. That's not actually required. if you are not drawn the straight line, then perpendicular line for the ledger account. Again teacher taking the wooden scale will happen in the 11th, 12th. So you understood it is a science. It's not actually science. It's art of communication. The business transactions should be communicated properly. I hope you're following this. So thereby you can prepare or structured farmer. If we can, professionals can easily understand. Other we have created trading account, P&L account, balance sheet, etc. and all. For common sense also we can understand. Opening stock plus purchases is equal to dash. Goods available in the shop. Total is available. Other what is already sold, if you deduct now, balance will be nothing but what? Closing stock. But when you deduct the sales portion, it is sales minus profit. Sales minus because sales will be at different price, stock will be at different price. Correct? Appa, then the profit if you eliminate, now you will be getting cost price of the goods sold. You will get cost price of the goods sold. Like this only trading account is developed. Correct? Appa, finally we have understood. Yes sir, I want to get 4 information. What are the 4 information trading account? Opening stock, purchases, sales and profit. So that I can arrive dash as balancing figure. Closing stock as balancing figure. Correct? Listen carefully my dear friends. So I am in the process of finding what? I want to find the stock that existed on the date of hire. Stock that existed. So you should know one thing. When I prepare the trading account, it is for a period. It is for a period. So when I say trading account, the closing stock should be nothing but stock on date of hire. Stock on date of hire. But I should prepare the trading account in such a manner that it ends on the date of hire. Commences abdinna, it should be from the beginning of fire period. Which means beginning of the year in which fire occurred. Our trading account is a period statement. It's not a point statement. Balance sheet is a point statement. What is point period, sir? Period, na, this information is true for a given 3 months, 6 months like that. Point information, it is true only for one date. That point and period. Now listen carefully. About trading account of period, about what date to what date? The beginning of the year in which fire occurred till the date of fire. Why till date of fire and all, sir? Why not be like 1st April to 30th June? Like that will happen. Na? 30th June if you prepare, na, stock is 30th June stock. If you prepare the trading account as on 31st July, then stock is on 31st July. Now, I want stock on date of fire, which means your trading account should end on the date of fire. Upon the closing stock will naturally representing the stock on the date of fire. I hope you are following this. About you should be very clear about the period. So which period? So trading account is prepared for which period? It is for the beginning of the year in which fire occurred till the date of fire. You need to take this information. Opening stock, purchases. In the 4 information you have to find out na. From where I will get this information? Very simple pa. Opening stock information will be available in your previous year financial statement. Previous year financial statement might be there with you. Sir, you only told accounting everything destroyed by fire. Then maybe with your auditor, maybe with your GST department, maybe with your bank, income tax department, or some sources. So there will be your financial statement that will be available with some other source. So that particular financial statement, you can take your opening stock information. Correct? So from previous year records doesn't mean it is there with you, maybe available with somebody else. That includes your chartered accountant or your financial institutions. So there you can get your information about what? Opening stock. Then we have what? Purchases and sales. Information you can extract from your suppliers and customers. Suppliers, customers. Also from bank statements. By analyzing your bank statement, the cash that gets credited you have deposited as and when you collect money from customers. So if it is cash sales, etc. So by analyzing supplier information and customers information, you can get the information about what? Purchases and sales. Like that you are extracting information. I hope you are following. Then my dear friends, gross profit is nothing but sales into gross profit ratio. Sales into gross profit ratio. Like that you can easily ascertain the gross profit amount. So once you get this information, my dear friends, you can arrive at dash as balancing figure, closing stock as balancing figure, which represent what? We will not call it as closing stock. It is called stock on the date of hire. Now listen carefully, my dear friends. All these informations what you are ascertaining, no? When I explain all these things, some students will tell, sir, wantedly I will overstate these figures. I have purchased for this much amount, I'm telling like this. So right at the first class level, intermediate or first lecture, they think like or criminal type, or maybe they may think like, what if such business people have done this particular criminal activity by overstating figures and all. Please understand, my dear friends, like how you are intellectual, insurance company intellectual, they will verify all these statements. So I don't have answer as an accounting faculty for the crime you commit. Later on you are found you have committed that crime through some source, then definitely you will be punished for it. So thereby we don't have answer to like what if I overstate the figure, etc. Now one thing you should be understanding that these numbers may not be a pakka accurate numbers. They may not be an accurate numbers. They are involving a lot of estimations. So maybe you take suppose I don't have information about cash sales. I have only credit sales information, credit purchase information. Because I have creditors, debtors information for credit transaction, not for cash transaction. If I go to a shop, I buy one product and I pay money, will that person write my name? If I go to the shop, I buy one product, I will tell I will pay 2 days later. Will they write my name? Yes. Of a credit transaction history he will have. Cash transaction he will never mind. I pay money and I am telling I am Jaison. Whoever you are, I am least bothered, get lost. So the point what I am telling is that cash sales, cash purchase transaction details I may not have, then I may have to estimate based on the previous proportion. Maybe I have from bank statement, or I may have to estimate from the previous proportion. Last year, credit sales this much, 8 lakhs, cash sales 2 lakhs. Above this year, credit sales 16 lakhs, our cash sales should be how much? Like that I can use a proportion, correct? So the point what I am telling is that these numbers are not dead accurate. It might involve estimation, and since it is involving estimation, this trading account usually we call it as memorandum trading account. What do we call? Memorandum trading account. Sir, by using common sense, I told you that I have to prove how much stock I had before fire. I told you there are two such statements, trading, balance sheet. I prefer trading because it have very less items, so less efforts as compared to balance sheet. So accordingly, I proceeded with the trading account. So in which opening stock, purchase, sales, GP, if I find out, I can arrive stock as balancing figure. And what are the general sources we have, like that we are telling, we are giving you some explanation. Too much of explanation will lead to too much of confusion, so, but doesn't matter, let that be settling, because practically you should visualize how these things happen. You don't be like merely a student, question it will be given. Now I will clarify you, I will simplify also. So much of confusions you need not create. All these 4 numbers will be given in the question. As a student, these 4 numbers will be given in the question. But practically how these numbers will be arrived in, you should be aware of. That is how I want you to learn. I don't want you to learn like step number 1, step number 2, step number 3, tuck and answer. And I solve 40 different type of questions. I don't want to create such people. So thereby please, this is a sequence in which we proceed our discussion. Then we'll create that academical structure also. I will also tell step 1, 2, 3, 4. We'll give a shape to this discussion. Presently you may feel like, no, structure formula I have learned in a different type. It's okay, I will give you a pakka structure to the discussion, my dear. Presently you understood this. So it's memorandum trading account is what we call. Why do we call this memorandum trading account? Because they are not accurate numbers, some rough calculations involved. So Tamil will tell kuttu madipa. So kuttugena madipa, it's not like that. So it's like, no, some estimation is involved. That is what we call it as memorandum trading account, which have opening stock, purchases, sales. Sales, GP, how to find out gross profit? Sales into gross profit ratio. If you do now, you will be having what? Stock on the date of fire. I hope you understood this, right? Listen carefully, my dear friends. Now this gross profit ratio, no, a businessman normally we know. Businessmen normally they know what is the margin they will have. Every businessman consciously fix the margin. See, it is not like, no, I buy, I sell for some amount, then later on I will know profit or loss. It is not like that. I buy, then I will decide what profit I should get. Accordingly, I will fix the price. Correct? So most of the businessmen knows how much margin at which they are selling. Now listen carefully. Suppose a businessman says that I don't know the margin specifically, then even though they don't know the margin, but their system of doing business will be consistent from period to period. Without even their knowledge only, they will be following the systematic pattern. So you can take the previous year trading account. Take previous year trading account, which is having opening stock, purchase, sales and closing stock also. Previous year trading account having full information which is with somebody else. Take that information and take the profit, express it as a ratio. So that is the gross profit percentage you can find out. So what is gross profit ratio? Gross profit by sales into 100. So take previous year trading account, take previous year gross profit, take previous year sales, express it as a percentage, you will get the previous year gross profit percentage. Now, unless otherwise provided, we presume that previous year ratio is the current year ratio. Unless the selling price, cost price have not changed there, you can assume. I am not telling always a previous year ratio should be current year ratio, not necessary. But if nothing else is mentioned, you can presume that last year 25%, this year 25%. Like that you can take. Correct? So, this is common man, common sense application. Now let me tell academically. Academically, ratio will be given as a question. If it is given, no problem. But in some question, ratio is not given. But they would have given information for preparing trading account of previous year. They would have given information relating to trading account of previous year. So you should prepare trading account of previous year, in which you will write dash as balancing figure. Stock illa, gross profit. Then you will express that gross profit as a percentage of sales. So what is the ratio? How to calculate ratio? Gross profit divided by sales into 100. You will find out gross profit divided by sales into 100. Like that you should find out. I hope you are following this. That way to prepare this memorandum trading account, or I told you opening stock, purchases, sales information definitely given in the question. But gross profit amount they will not give. They will give gross profit ratio either directly or indirectly. Directly means I will tell gross profit ratio 30% they will tell. Indirectly means I will give information about trading account of previous year, using which you will find out gross profit of previous year. Using gross profit you will find out gross profit ratio. Then you will assume that ratio, the gross profit ratio of current year. But sir, what if selling price of that year is different and this year different? Then you can't use, can we use same ratio, different ratio? You should use different ratio. How to use different ratio? How to find out? We will discuss later. Like that, so many issues we have. Your doubts are normal. Super. You are getting some doubts. No, I feel like you are getting some doubts. Super. So those discussion one at a time will be resolved. The only thing is you should have the patience to listen further. So some doubts that got accumulated, it is not that immediately you should ask to somebody. Here the second lecture you will understand the remaining. So during the lecture process you will be definitely getting resolved so many doubts that gets accumulated, because first I seed a lot of doubts in the student's mind. Then I want them to get their understanding. Straight away, I never had the habit of giving pakka clarity to the students. Simple, straightforward discussion I never make. I put some seeds of confusions in their mind, through which over the period of discussion that it has to be resolved. And if it is not, then you can definitely come back to me. Straight away, pakka clarity and information alone you get now, then your brain is not functioning. What if it is like that? What if it is not like that? That is a very effective way you should be learning. Understood? So that is how we are understanding, my dear friends. So if the ratio is not given, you may prepare trading account of previous year and find stock on the date of fire. Once you find stock on the date of fire, you can give the statement and tell insurance company, this is the stock I have lost by fire. I can tell this is a stock we have lost by fire. But I will ask you one simple question. When there is fire accident, what will you do when there is a fire accident? In our place there is a fire accident. What will you do? You should tell the answer. In your front, no, you should not simply, yes, you tell. What will you do? Now, you don't expect me to answer. You answer. Several answers will come. So, you try to put off the fire. If you have a fire extinguisher, then use a fire extinguisher, bring water, petrol, so something and all you will bring, and you will try to put off the fire. Some people, what they will do, if they think that it is very difficult to put off the fire now, they will try to save whatever maximum they can save. Your computer, your mixie, your grinder, ladies know their products, your makeup items, like that they will try to save whatever they feel like important. Correct? So either of these two things will happen. Nobody is going to sit and enjoy the fire. Correct, Abba? High fire, wow, live fire. Let me enjoy the fire. We don't sit there. We will do what? Either put off the fire or save. Businessmen normally try to save some stock. If the stock is having high values now, then businessmen will try to save stock. Apo, some stock would have been saved. Stock would have been saved. Such a stock we call it as salvage value. We call it as salvage. What do you mean by salvage value? Those stock which was saved during that fire accident. We call it as salvage value. But whatever stock we had on the date of fire, full or not destroyed, no. Apo, full amount insurance company will not give. Apo, loss of stock equal to stock on the date of fire, stock on date of fire minus salvage value. This much only they will give. Suppose I had 5 lakhs, but I saved 1 lakh. What I have lost? 4 lakhs. This is I have lost. I had 5 lakhs, now I didn't lost 5 lakhs. I saved 1 lakh now. So which means whatever I lost, that only insurance company should give, no. So thereby, I first found out using trading account the stock I had on the date of fire. Then I deducted what? Salvage value. I had 4 lakhs, which is the loss. Correct, Appa? Sorry. I told you, my dear friends. Imagine my coverage is for 7 lakhs. My coverage is for 7 lakhs. Appa insurance company will give 7 lakhs? No. No, they will give only actual loss suffered. So they will give only 4 lakhs. So my policy is for 7 lakhs. What insurance company will give? Only claim will be only how much? 4 lakhs. Understood? Sorry. Suppose my policy is only 3 lakhs. Our insurance company will give 3 lakhs. But my policy will be say 4,50,000. How much? 4,50,000. Our insurance company will give how much? 4,50,000. Yeah. Claim will be 4 lakhs. Abdina, this answer is not necessary, should be correct. Sir, I took insurance for 4,50,000. Okay. I lost only 4 lakhs. It is less than that coverage. I expect them to give 4 lakhs. But they are telling we won't give 4 lakhs. Why? Why, sir? My amount policy amount is 4,50,000, sir. They promised me that if I incur a loss of 450, they will give maximum 450. Correct, Appa? How much I lost? 4 lakhs. But they should give me minimum how much? 4 lakhs. But they won't give 4 lakhs. They are giving less than 4 lakhs. Why? We'll tell in the next class. How much they will give, why they don't give 4 lakhs, that answer we'll give it in the next class. To be continued like a serial. Okay? We'll meet in the next class, my dear friends. Thank you. Good morning, friends. So, in fact, it could be good evening or good afternoon. Don't say good night. I don't know whatever time that you are viewing the lecture. So, this is lecture number 2, accounting paper. So, we will now continue with this topic that we have already commenced in the previous lecture. So, prior to that, henceforth, in every lecture you can experience one thing. We'll spend 5-10 minutes of the every lecture will be for the recap of what we have done in the previous class. So, in fact, even though we haven't taken much about the topic in the previous lecture, but this will be the trend, and during this period, I don't want you to be in an inactive mode. I have already told you, by way of repeating several times, it gets registered in our mind, number 1. Number 2, see, when we do the recap, it is an effective way of registering in our mind, something that we already learned, that gets stored only in a temporary memory. From the temporary memory, when you try to recap 1 time, 2 time, it gets stored in the permanent memory. So thereby, my dear friends, a recap is always must. So it shouldn't be like, I am doing some formality and you are hearing it. I want you to participate along with me, which I have already told you that the participation, interactiveness is very much required. Whether it is our problem solving, whatever be the theories, we recap, etc. I want you to be interactive mode. So when you are attending like face to face, eye to eye meet, that is one different story. And at your place, conveniently when you are doing, you should try to, when I am trying to put all the efforts to ensure that the classroom experience is at your home, you should also put the same efforts to ensure that the extraordinary classroom atmosphere is there, you are experiencing at home with little bit of additional comfort. So the traveling from one state to another state, so that comfort when you have, but still I am taking extra effort, you also put. So these two together, when you do like this, then that makes the noise and it really provides a success. If it is only one way, if I do like see, there are faculties provide extra energy and all. I find that in the online platform and all, good evening friends, good morning friends, etc., accounting paper like that. It doesn't work on a one-side basis is what I am telling. I want you to respond along with me, okay? So coming back to this, in the last class, I told you, we gave a lot of introduction part, like 1 hour, 15 minutes or so. I was actually explaining some introductory sessions because coming after foundation, in intermediate, very first paper, accounting. So being a very proud chartered accountant, representing this CA community, coming from a very, very humble background. So I was explaining about like, what exactly CA, what is the role of CA, how you should be feeling passionate to do CA. So otherwise it won't work. It is not to be like, I also want to do along with my friend, somebody pushed me, etc. Like that we gave introduction about CA course, dignified premier course, why dignified, the self-respect, the self-esteem, all these blah, blah, blah. Let us not again recap all these things. There is only one time exercise. Then we discussed about our class, how it will proceed. So approximately around 180 hours of duration. I explained you about how the accounting paper will be. It's most trusted, reliable paper. Every step will have marks. There are students, 100 marks, final answer have not come, still securing 60 plus. So that way it is more reliable, trusted paper. So if you try to understand the concept, then if you are ready to attempt any question, not answer, arrive at the full complete answer, attempt the question in itself, you are equipped enough to score the pass marks in this. More marks, extra efforts, and getting correct answer for few questions at least. Then we told you various expectation from you, the ruled sheet, calculator, please don't use mobile for calculation. So in a classroom, if a student touches the mobile, only will break the mobile, will throw the mobile and all. But here I can't tell that. Suppose if you are hearing the lecture only through mobile, throw the mobile, I can't tell. So you can continue to view the lecture through the mobile. But for calculator, please buy a calculator. Don't tell later on I will buy. Don't show that a negative attitude, different attitude. Don't cheat me. You have to buy a calculator. Practice with the calculator, the numbers and the calculations, etc. And you should participate in the calculations. Must, my dear friends. Though I might take the help of somebody here for the calculations, etc. But I want you to calculate, experience the numbers, see whether it is correct or not. Maybe through the lecture mode, 1 or 2 place, some mistake happens. You can immediately, the moment you view the lecture, you can put it in the Telegram, so WhatsApp, everything is available to you. Sir, so and so calculation, I found it wrong, or this is the way I have done. So that way, I want you to independently experience the calculations, etc. So that is one expectation we had. Then so many blah blah things. I told you what are the syllabus we have. I was listing out the topics, whatever contained in the module. We have 3 modules for accounting: module 1, 2, 3, accounting standard, company accounts, then special transaction and special accounting. Like that, we have 3 modules. Explained you the various chapters, relevance in the examination by giving the weightage of the marks. Exactly the same marks may not come. So approximate weightage has been provided, my dear friends. After doing all this introductory part, we started with a topic. Why did I start it? No, my logic is very simple. This does not have more accounts straight away, more regulations, rules, company law, etc. Nothing is there. So we have little bit of compliances, little bit of accounting, more of computation. So when you start with accounting chapter, I want you to feel slightly comfortable with what we are already accustomed to, that is calculations. We all love calculation, whether we like mathematics or not. Addition, you always like it, my dear friends. So on that basis, we started our topic with the topic called insurance claims. Now I was explaining about what is insurance. So we always start our discussion like this. I told you after explaining that how much mark it will come, no marks and all. For formality, because in study module also, you don't have anything called what is insurance. It's just that, what is insurance? Insurance is a contract. 2 parties, I told you should immediately visualize whom? Insurer and the insured. When I say insurer and insured, who is insurer? Insurance company. Insured, business entity. So insurer agrees to compensate the loss suffered by the insured in return of consideration called premium. So I told you, I create so much of wealth, suddenly one day I lost that wealth by the natural calamity, then there is no purpose of doing business. Then everybody will tell no, nothing is permanent in this world, everything is maya, today will come, tomorrow will go, like that only people will speak. See, if I lose on account of my fault, then no problem. If I lose because of the factors beyond my control, then I have no motivation to do the finance, and there is no materialistic world that will be created. So for that purpose, insurance plays a significant role in our entire life. It is not merely economy, it is not only business world. Throughout the human life, this particular sector plays a very, very important role. That means a very big ocean, my dear friends. You cannot now disconnect the concept of insurance from the human life. So that is how it's a very, very widened concept. But this life assurance and the general insurance, which is further divided into fire, marine, others, I told you we are focused on through this chapter only on to one type of insurance, which is the fire insurance. We are going to learn from not how accounts will be made by the insurance company which collects a premium, which gives a claim, etc. So you are asking for 1 lakh loss, we are giving how to account. We are not discussing in this chapter. We are discussing from the viewpoint of business entity that has suffered a loss and how much is the loss, and they make a claim. So computation of that claim, determination of that claim amount is what we are going to learn in this topic, my dear friends. So from that way, I told you ocean, then I told you it is only a river, then it is a pond, it is a well, or a bucket, or a bottle of water. Like that we told how, because we are going to learn only small aspect of insurance. What is that we are going to learn? So from various discussion, we zeroed in on to the learning objective. So zeroed in, we came to a conclusion, this is what we are going to learn. So what are we going to learn, my dear friends? It is computation of claim for loss of stock, Loss of profit in a fire insurance policy from the viewpoint of insured, from the viewpoint of business entity. So this is what we are going to learn, my dear friends. In the last class, we have started our discussion with claim for loss of stock. My dear friends, don't lose the patience. I want all these students to learn with the concepts like a layman, how the concept evolved, and then we can create the shortcuts or steps, etc. So straight away don't expect me like any other person to tell like step number 1, step 2, like that and all. So let us think like a layman, what is exactly the concept, and then how that concept was evolved. Concept meaning as well as how it was created. Everything is man-made. What was the logic behind to do this step? What is the logic behind to do step 2? So like that we want to learn, my dear friends. So on that perspective only I started our discussion. Proceeding further. Claim for loss of stock. I told you, just to visualize the scenario, I have taken an insurance policy. I am a business entity. I have taken an insurance policy by paying premium. Say if I pay premium of 3,000 rupees, say I might get a coverage of 3 lakhs. So you should know, it is not 3 lakhs I paid, I will get 3 lakhs. I paid 3,000 rupees, and if I get any loss, a particular period, generally a period of 1 year, general insurance means 1 year. So I paid 3,000 in a year, within 12 months, if I get some loss, that loss will be compensated subject to 3 lakhs. Whatever amount specified in that insurance contract. It is not always like 3,000 or 3 lakhs, 5,000 or 5 lakhs. More example I am telling, the amount of premium, policy coverage differ from insurance company to insurance company. It is not like one entity we have called insurance company, that insurance, this insurance, like that. So many different insurance companies we have. So many companies dealing in insurance service. Okay, coming back to this. If I pay 3,000, coverage of 3 lakhs. If I lost 60,000, they will give me 60,000 only. That is what we call it as compensating the loss suffered. Is the concept. Sorry. Only actual loss I suffered only will be compensated. No. I should only tell how much I have lost. So when I had met with a fire accident, then I have lost some goods. So it is that I have to intimate the insurance company about the fire accident. I should only tell how much I have lost, which they will definitely verify and they will make the final settlement. Anyway, what is the amount of loss? For that I can't tell some number. So I told you that you may tell, sir, why don't you take it from accounting records? Sir, I told you fire even destroyed even the accounting records also. So I don't have accounting records. Fire came, everything destroyed. Insurance company coming and asking, how much stock you lost? So I just want to prove that this is a stock I had before the fire. So that easily they can understand this is a stock I have lost. So to tell them this is a stock I have lost, first thing I have to prove is that, or first thing I have to determine is that how much stock I had just before the fire accident. So what is the stock I had on the date before on the time before the fire accident. Okay. So this I have to find out. Seri. I have to create some accounting statement that will have stock in it to prove that this is a stock I had. So for that I visualize. Now comes accounting knowledge, BRS, balance sheet, trading account, trial balance, like that you have various accounting statements that you can prepare, which is not necessary from the books you prepare. It is away from books we prepare balance sheet, trial balance, the trading account. So using the book information we prepare some additional statements. No, like that we can prepare statement. Like that 4 things we have. I told BRS will never have stock in it, so it is straight away ruled out. Trial balance will have stock but will have opening stock and not a closing stock generally. So we ruled out the trial balance also. So finally we zeroed onto 2 different statements called trading account and the balance sheet. A trading account means goods bought, goods sold, events, and what is the profit. So normally what sales, cost of goods sold will give you profit. What is cost of goods sold means? Say, rather than explaining the trading account, common sense approach is what? Profit is equal to, or trading profit. When you say trading profit, which is equal to sales minus cost of goods sold. So sales will be at selling price. If I sold 100 units, and it represents selling price. I want cost price of 100 units. That is what we call as cost of goods sold. Cost of goods sold can be normally determined as opening stock plus purchase will be the total goods minus closing stock will give you how much goods that you have sold. Opening plus purchase is the goods available in the shop. At the end of the year, you again see how much stock we have. This is what we have now. Balance and all has been sold. So that way you can arrive at this cost of goods sold, which can be done in a statement form, which can also be done in the form of a trading account. Opening stock, purchases, closing stock. So if you have these three items, my dear friends, and we have this particular sales. About profit will normally be the balance. But if you take profit and you don't know this information, then that information will be the balancing item. Like that we can understand. So either in a normal statement form or by preparing an account form, you can find out what is the stock on the date of fire. This is trading account. Similarly, balance sheet you can prepare. Balance sheet as on fire accident. You can prepare various assets on fire accident, various liabilities on fire accident, capital, so that you don't know stock figure. Stock can be arrived as balancing figure. If you can find out all other information in that statement except stock, stock can be arrived as balancing figure. This is what I had, and we can tell. So suppose something like, I had 100 rupees, I spent for so and so purpose this much, so and so purpose this much, then balance is this much. Like that balancing figure we arrive. Similar concept only we are applying, my dear friends. Like or trading account, this stock I had, this I purchased, this sold, so balance how much. Like that we are arriving concept through trading account. As far as balance sheet is concerned, these are the assets, these are the liabilities. My wealth position is what balance sheet. So out of these two statements, I told you, we will select the statement which is convenient to us, which is easy for us. So when we compare these two statements, which statement contains less item, now it is only trading account. So we finally zeroed on that. To find out the stock on the date of fire, we go with the trading events, the trading account. So that way we finally concluded. Now this is how conclusion comes. Straight away I could have told, instead of wasting 2.5 hours of yours, I could have told, prepare trading account, arrive closing stock as balancing figure. Now that we zeroed on, so let us proceed. Conceptually we try to understood. So we prepare something called trading account, which will have opening stock, purchases, sales and profit, so that closing stock can be arrived as balancing figure. So I told you this trading account in a common sense approach, this is how you do. Opening stock plus purchases will be called goods available with us. Then from total goods which are available with you, you deduct what is sold. When you say what is sold, it is nothing but sales minus profit. Sales minus profit. Like that common sense, like this also you can do. There is no rule that you should prepare T-shaped account. You can do the statement form. Opening stock plus purchase. What is that called? Goods available in the shop. Deduct whatever sold. Naturally, whatever closing stock I have. This is simple common sense. Like that you think. So that only will be present in the form of a trading account. Only thing is, here instead of deducting this profit from the sales, in the same side, we will show it in the opposite side. Effect will be same. Instead of deducting from the credit side, adding to debit side, effect remains the same. So opening stock plus purchase plus profit minus sales will give you the stock on the date of fire as balancing figure. Now only thing you should ensure is that you are preparing the trading account that ending on the date of fire. Then only you will have this stock that exists on the date of fire. It is not merely arriving at some closing stock. If you want stock on the date of fire, in the trading account should end on the date of fire. And opening stock the beginning of the year. So thereby you are preparing this trading account from the beginning of the year in which fire accident occurred till the date of fire. Once again, for finding, finally this much only, to find out stock on the date of fire, you are preparing a trading account which is for the period commencing from the beginning of the year in which fire occurred till the date of fire. Like that you are preparing trading account, in which several information you have. How to get that information also I already told you. Opening stock, purchases, sales, all this information from various sources, purchase and sales from customers and suppliers, opening stock from previous year statement. Like that we told, my dear friends, profit, a person should be knowing the margin, will take that information. If he doesn't know, prepare trading account of previous year. Sometimes students will get suddenly doubted, sir, trading account of previous year is not there. Why? This year only commenced business, sir. Okay. Upon in that industry, some margin will be there, and that will be taken by the insurance company. It is not a new type of business, no. Even if it is new type of business also, then mutually agreeable. So what was your cost, like that, everything can be. The skillful people, knowledgeable people will always have data and informations, my dear friends. Even if it is new Covaxin or COVID medicine comes now, what is the margin in it? Any experts can be handled. It is not that insurance company will always depend upon some finance persons. They will take the experts, they will take the help of a doctor to understand the margin, etc. So thereby you should not claim like a schoolish approach, school level kid mari, I don't know information, like that. You can't tell. At a higher level, every data will be available. If not the dead accurate, some approximate information will always be available. These informations are not necessary to be exactly accurate. Some approximation is involved. When I say approximation, it is not like 10 crore you are taking as 10 lakhs. It is not like that. 10 crore you may take it as 9,99,000. I mean 9 crore 99 lakhs, something like that. So which means more or less equal to actuals is what we call as approximation. Since it is approximation and not exactly as per the books of accounts, we call the trading account as memorandum trading account. What do we call? It is called as memorandum trading account. Why do we call memorandum trading? Some students will tell half the year, quarter of the year. Why? Quarterly report can be called a pakka statement. So it is not a half year, full year, etc. It is because the statement will have approximate information, and that is why it is called as memorandum trading account. So we prepare a memorandum trading account for the purpose of finding stock on the date of hire, in which information will be extracted from various sources. This is the concept. Now comes academical part. For classroom purpose, information will be given in the question. All this information will be given in the question. It has to be given in the question, except the profit information, which will be given in the form of a ratio. Sometimes ratio will not be given. What they would have given is, they would have given the information about the past periods, so that you will prepare trading account of past period, arrive at gross profit, arrive at gross profit ratio. Like that we are explaining this, my dear friends. Very elaborated we have explained. Now it's an elaborated discussion only. Finally you arrived at, okay sir, everything pakka. I proved this is the stock I had on the date of hire. Correct. But every stock you had on the date of hire would not have been lost, would not have been destroyed. I told you, when fire came, did you enjoy the fire, live fire? You try to save some stock, no? Either put out the fire or you try to save the stock. So some stock would have been saved. Such stock is called salvage value. I already explained to you that it is salvage value. Everything, no, when I say some fill in the blank, I want you to open your mouth and spell out. So when I say salvage value, you should tell. So you should not keep quiet, no, simply staring at the monitor. Sir, buying energy. No, I want you to repeat. So once again, loss of stock. Stock what I have lost is equal to stock I had on the date of hire. Stock on the date of hire, open your mouth. Stock on the date of hire minus salvage value. Okay. So that way we determine the loss of stock. Stock has been lost. Now, when I have lost 4 lakhs, naturally they should give me 4 lakhs. Provided I have taken at least the insurance for 4 lakhs. I gave you different situations. Sir, policy has been taken for 7 lakhs. Then you have taken that much. I lost only 4 lakhs. Now they will definitely give me 4 lakhs. But policy taken for 3 lakhs. Now they may give only 3 lakhs. But here also the answer may not be correct. So what happens now? There is a concept of average clause, my dear friends, to determine the claim. For determining the claim. Now up to this, I asked you what is the reason that this answer may be wrong. So for that only, my dear friends, we need to go with the understanding about average clause. Average clause. So for computing claim, we have something called application of average clause. Application of average clause. So for computing the claim, we need to apply the average clause. If provided in the agreement, if provided in the agreement. What is that, sir? I am not at all understanding. What is this average clause you are telling? So listen carefully, my dear friends. When I have stock on date of fire, stock on date of fire as 5 lakhs. The concept of average clause is to discourage under insurance. The concept of average clause is to discourage under insurance. So which means, my dear friends, what happens now? Stock on date of hire 5 lakhs. Ipo, what happened? Salvage value 1 lakh. Means what? Loss of stock, say 4 lakhs. Loss is 4 lakhs. Appo listen carefully, my dear friends. Policy amount or sum insured. Sum insured is 4 lakh 50. You might tell, sir, I lost 4 lakhs. I had taken a coverage for 4 lakh 50,000. I lost 4 lakhs. I had taken a coverage for 4 lakh 50. So you might tell that, sir, the insurance company has to give me the full amount. No, sir. Correct now. Suppose if there is no mentioning about the concept of average clause, there is no mentioning about the concept of average clause, then in this question also, my dear friends, answer will be correct, that 4 lakhs is correct only. I am not telling 4 lakhs cannot be correct. So it is not that average clause is mandatory. Average clause is something that if it is mentioned in the agreement, that average clause we will apply. So if that is there, which means that insurance company wants to discourage the under insurance. What is under insurance here, sir? On the date of fire, you had 5 lakhs stock, which means on the date of fire, your real risk was for how much? 5 lakhs. But you took policy only for how much? 4 lakh 50,000, which means you gave the risk to the insurance company only 4 lakh 50,000 out of 5 lakhs. That proportion, which comes around, exactly 90%. So 90% of total risk you gave to insurance company. Then insurance company will tell, when you have lost 4 lakhs, then in that 4 lakhs also, that 90%. What was the 90% means? The proportion of the total risk to the risk covered. Concept. I don't want you to learn formula. Every books have formula. Every people will tell formula. Average clause application formula equal to loss of stock into policy amount divided by stock on date of hire. Formula, va? No common sense. What is the common sense? When we had this much stock in my shop, I had 5 lakhs. You took insurance policy, na? We want you. Insurance company says, we want you to cover full risk. Full risk coverage, we will give full amount. If you are not taking full risk, which means that is called under insurance. Under insurance, we will also compensate you proportionately. We will compensate you. You should not tell, no. We have taken 450. We lost 4 lakhs. Why don't you give full amount? No. You have taken under insurance. So we will punish you. So we will give you only proportionately. Our claim will be, in that case, my dear friends, 4 lakhs you lost. Now, what was the total risk? Total risk was 5 lakhs. That much stock you had on date of fire. 5 lakhs. In the 5 lakhs, what have you insured? 5 lakhs was the real risk you had. Though you lost 4 lakhs, you had a real risk to the extent of how much? 5 lakhs. In the 5 lakhs, how much you have covered with the insurance company? You covered only 4 lakh 50,000. This is the proportion. This is the proportion. In this proportion only, I will give you the claim. Application of this proportion, we call it as average clause. Okay. So it is coming to 3,60,000 will be the claim. I hope you understand this. Listen carefully, my dear friends. This claim because of applying average clause. Applying average clause. Applying average clause. If the agreement does not say about average clause, if agreement does not say about average clause, my dear friends, then claim will be given fully. So if average clause is not applicable, if average clause is not applicable, don't get confused here, then it will be 4 lakhs. Then it will be 4 lakhs. Then you will tell, sir, then businessman will always tell, we will not apply average clause, we will not apply average clause. You should understand, it's not businessman telling I want average clause or I don't want average clause. Insurance company will tell at the time of you taking the policy that for this policy dash is applicable, average clause is applicable, we will apply this, there is average clause is there, one of the conditions of the agreement. So the policy has average clause application, like that in that agreement they would have mentioned. Some company will tell no, we will not apply average clause and all. So in that case, if average clause not applicable now, they will always compensate you actual loss subject to the policy amount. They will always compensate you the actual loss subject to dash amount, policy amount. You lost 4 lakhs, policy amount 450, then we will compensate you 4 lakhs. You lost 5 lakhs, policy amount is 4 lakh 50, then we will compensate you only 4 lakh 50,000, which means if average clause not applicable now, what is the claim amount? What is the claim amount? Claim amount will be dash or dash, whichever is less. Loss of stock, policy amount, whichever is less, is how you should be understanding. I hope you are following. Apo, sir, it is not businessman's decision, choice to apply average clause or not. It is something that should be mentioned in the insurance agreement, whether average clause is there in that agreement or not. I hope you are following. Now, this is practical scenarios. It is there in the theory also. Now, when you solve problem as a student, now one issue is that students know we have the complete answer, complete concept, but questions sometimes lack information. So at that time, how a student should react? So those things only some added advantage of attending a classroom, that's all. Otherwise, you can have self-preparation from your study module only. So if nothing else is mentioned, then that policy always implied to have the average clause. We'll provide a note about it. It is assumed that the policy has application of average clause. The policy has application of average clause. Like that, we will make an assumption, my dear friends. So if nothing else is mentioned, only if the question specifically states that this policy, for this insurance, average clause is not applicable, like that very clearly mentioned, then this answer you can take it. It is special answer. Apo, if nothing is mentioned in the question, we will apply average clause or we will not apply average clause? We will apply average clause. But to apply average clause also, you should know one more thing, that there should be the underinsurance. There should be underinsurance. Suppose there is overinsurance. There is overinsurance. If it is overinsurance now, then there is no need for concept of applying this particular average. Even if the insurance agreement mentions that this policy has the concept of average clause, if it is clearly mentioned in the policy, but you have overinsured it. So if you have overinsured it, if you look into the scenario, my dear friends, I don't want to confuse you here much, so listen carefully. Scenario number 1. You took policy for how much? 7 lakhs. When you have how much stock? 5 lakhs. So at that time, it is underinsured or overinsured? It is overinsured. You had how much stock? 5 lakhs. You took policy for how much? 7 lakhs. Under or over? You have taken insurance more than requirement. Now suppose in this policy, it is very clearly mentioned that average clause is there. In the policy, they have mentioned about average clause is there. So if such mentioning is there also, but for computing claim, we will not apply. So two things should be there to apply average clause. What are the two things, my dear friends? One, it should be mentioned in the policy. Number two, at the time of fire, you should understand that the situation is that it is underinsured. At the time of fire, you determine the stock on date of fire and you find that the policy amount is less than the stock on date of fire. That situation is what we call as underinsurance. What do you mean by underinsurance? The policy amount being less than the stock on the date of fire. So when will you apply average clause? Whenever there is underinsurance, you can't tell. Whenever it is mentioned in the policy, you can't tell. Two conditions cumulatively should be satisfied for you to apply average clause. When can you apply average clause, my dear friends? When it is mentioned in the insurance agreement, number one. When it is mentioned in the insurance agreement, number one. See, all these things, no, anyway, I am going to provide in the form of a proper notes. You don't worry about it. I am just explaining you. Now, this is only a concept time. So, during the concept time, I am explaining you. So, listen carefully one time. So, there is something called average clause. What do you mean by average clause? Applying a proportion to the loss. For computing the claim, you are going to apply a proportion, is what we call it as average clause. So, what is average clause? You understood. When will you apply this particular proportion? When will you apply this average clause? Two conditions should be satisfied. What are the two conditions here? It has to be mentioned in the policy that it is underinsured. I'm sorry. Average clause is covered in that particular policy. Then you should understand that it is underinsured. So then only you will apply this particular concept. I hope you understand this. Proceeding further, my dear friends. Okay. Now one more point what I want to tell is that now we are very clear now when average clause should be applied, when average clause need not be applied. A third scenario I will tell you, my dear friends, that see again the question of average clause will not come. The question of average clause will not come if it is a complete loss by fire. If it is complete loss by fire. So one thing be very clear, my dear friends. If you apply average clause, how to compute the claim? Loss in that a proportion we are applying. What is the proportion? Stock on, policy amount divided by stock on date of fire. Loss into policy amount divided by stock on date of fire. Now, this application will have some sense. This will have sense only, my dear friends, if it is a partial loss. Only if it is a partial loss. If it is a complete loss, then this particular application will not make sense. I will tell you. Now, what is the answer I told? If average clause not applicable, what is your answer? It is actually loss or policy amount, whichever is less. Loss or policy amount, whichever is less, will be the answer. I told if average clause is not applicable, loss or policy amount, whichever is less. Now listen carefully, my dear friends. In case of complete loss, what do you mean by complete loss? Listen carefully. Stock on date of fire. Now this is only a concept time. I will provide a pakka detailed notes about this stock on date of fire. Now we want to discuss about complete loss. The previous examples are partial loss. Stock on date of fire. So listen carefully, my dear friends. Stock on date of fire. Say 5 lakhs. Salvage value nil. What does that mean? You have not saved anything, which means completely destroyed by fire. Policy amount 4,50,000. Policy amount 4,50,000. Imagine, my dear friends, in the insurance agreement, it has been mentioned that average clause is applicable. In the insurance agreement, it is mentioned that average clause is applicable. I told you two conditions should be satisfied. What is the other condition? It should be underinsured. There are two things. One is insurance agreement, there is a clause for average clause. One of the conditions is average clause. Number two, it is underinsured. How do you know underinsured? How much stock I had on date of fire? 5 lakhs. How much is the policy? 4 lakhs. Underinsurance. Our two conditions satisfied? Yes, sir. Average clause applicable or not applicable? Applicable. But in spite of it is being applicable, it doesn't have any impact at all. If you apply, listen carefully, my dear friends. If you apply, then it is how much is the loss here? Loss is 5 lakhs. Loss is 5 lakhs, fully lost. Imagine you applied the average class. What is average class proportion? Policy amount divided by stock on date of hire. So your answer will be how much now? 4,50,000. Suppose you didn't apply average clause, then what will be our answer? Loss or policy amount, whichever is less. Loss or policy amount, whichever is less. Like that we will arrive at the answer. No. If you apply that 5 lakhs or 4.5 lakhs, whichever is less. If you apply, you will be getting 4,50,000. This is with average class application. This with average class application. This without average class application. So what do you understand? Whether you apply average class or whether you don't apply average class, answer remains the same. So here you applied average class. Here you didn't apply average class. You applied the direct principle. What direct principle? The stock, that is loss of stock, or the policy amount, whichever is less. Like that you applied. Now both the answer give you same result only if it is dash loss. If it is complete loss. But there is no question of the average class application when it is complete loss. In complete loss, like even though average class conditions are satisfied. See, whether it is complete loss or partial loss, we don't know when we take the policy. So, policy they would have mentioned about the average class requirement, etc. Then you also understood it is underinsured. But the moment you know, fire time, not even a single rupee stock is saved. Everything has been destroyed. Straight away, answer is what? Loss of stock or policy amount, whichever is less, not whichever is high, whichever is less. That amount only should be considering. Suppose, no sir, two conditions satisfied, I only apply average class. Apply, you will get same answer. Only thing is, you are doing some extra step. I want to do extra step. Do. So when we say something, no, students tell like, no, I want to do extra step, etc. and all. So if in spite of telling them the concept also, some students will feel like this. So thereby, let us now consolidate on to various issues that we discussed before we jot down into writing. When we compute claim, first you already computed loss of stock. Come to claim. When you compute the claim, you need to check whether it is a complete loss or whether it is a partial loss. You need to check whether it is complete loss or whether it is partial loss. If it is complete loss, straight away answer is what? Dash or dash, whichever is less. If it is complete loss, straight away answer is dash or dash, whichever is less. What is dash? The policy amount. What is another dash? The loss of stock or stock on date of hire. Both are one and the same because it is complete loss. No, complete loss is stock on date of hire is equal to loss of stock. I hope you are following. So these two amounts, whichever is less, like that you arrive at this particular straight away answer. Now partial loss. Partial loss means what? We have salvage value. What do you mean by partial loss? We have salvage, which means we have saved some stock. Stock on date of hire is some amount, but stock lost is something different amount. Correct, Appa? That is what we call as dash loss. Partial loss. So in case of partial loss, again, can I apply the same formula? What formula, sir? Loss of stock or policy amount, whichever is less. Yes, you can apply if the insurance agreement doesn't say about the average clause. I hope you are following this. Just because of there is partial loss, straight away average clause will not be applied. So it should have been mentioned in the agreement. Which agreement? Insurance agreement, the fire insurance agreement. It should have been mentioned that there is application of average clause. Sir, suppose it is already mentioned in the agreement, sir, but I find it is not underinsured. Even then, you don't have the concept of applying the average clause. Now I would say three conditions for applying average clause. What are three conditions? The three conditions are: there should be partial loss. It should be mentioned in the agreement, policy. Third, it should have been underinsured. So only under that circumstance you will apply the average clause. Otherwise, you will not apply average clause. I hope you are following. So, in all other circumstances, straight away your answer will be dash or dash, whichever is less. Policy amount or loss amount, whichever is less. That way you can arrive at the answer. Understood? Because if you look into the study module, my dear friends, you find like different branches you find. So 3 situation, 4 situation, like that slightly confusing area. So I am telling you the situations, all the condition cumulatively satisfied. Even if one condition not satisfied, straight away you need not worry about dash clause, average clause. Okay. Out of what are 3 conditions? Once again, we will put into writing. Don't worry. Repeat. 3 conditions. What are 3 conditions? First, there should be partial loss. Adhikku what you need to understand, there is dash value, salvage value. The moment you understand there is salvage value, immediately you understand it is dash loss, partial loss. So because question will come, sir, how do I know whether it's complete loss or partial loss? You need to know whether salvage value is there or not. Fire came, definitely would have destroyed something. So the question is, have you saved something or not? So that way you understand salvage value, partial loss. Second, is it mentioned in the agreement or not? Now this point alone, you will assume it is mentioned in the agreement if the question doesn't provide so. Otherwise, if the question doesn't provide the otherwise information, then you will always assume that the policy has the condition of average clause. Now this is the place where as a faculty we are giving you the guidance, my dear friends. So when we find the institute questions of around some 16 to 20 questions across various RTPs and study modules and all, so the institute is expecting the student to assume that if nothing else is mentioned, the policy always has the condition of dash average clause. Correct, Appa? First, whether it is complete loss or partial loss, assumption illa. That well clearly will be mentioned. But second one will sometimes will be silent. Whether average clause is there in the agreement or not there in the agreement, a question silent. Appa, what is my stand? What is student's stand? Average clause is there. Understood? Third, is it underinsured or overinsured? So third condition should be there, no? So that will be assumption or it should be determined, or it should be determined. Student should compare 2 numbers. Which 2 numbers they should compare? They should compare the policy amount with dash, stock on date of hire. Never they should compare the policy amount with loss of stock. Nobody take insurance for loss. So as in our example, please be aware, my dear friends, you don't come and say, sir, my policy is 450 and my loss is only 4 lakhs. I have overinsured. No, you are not taking insurance for the loss. You are taking insurance for the stock you had on date of hire. So please, my dear friends, underinsurance or overinsurance is never based on the comparison of the sum insured with the loss. It is a sum insured with the stock on date of hire. So we are discussing about claim after computing loss of stock. How to compute loss of stock? I first found out stock on date of hire. From there I deducted salvage value. I found out loss of stock. Then I am computing claim. Just for the computation of claim, I want to know whether average clause concept is applicable or not. Or should I apply the proportion here? For that, I need to check 3 conditions are satisfied or not. What are the 3 conditions? Complete loss or partial loss? First other question. The moment you know it is complete loss, second and third question you won't ask. If the moment it is complete loss, straight away answer will be what? Dash or dash, whichever is less. Dash or dash, whichever is less. What is that? Policy amount or loss of stock, whichever is less. Like this, straight away you will arrive at the answer. No, sir, it is partial loss. Then you need to check like average clause is mentioned in the agreement or not. If the question says it is not mentioned, then it is not mentioned. If the question says, if the question doesn't say anything, it is mentioned, you should assume. Question says it is mentioned also, it is mentioned. Question is silent also, it is mentioned. So which means when is that we can say this insurance does not mention about average clause only if the question say that the policy does not have the application of average clause. Like that very clearly mentioned, then no average clause. Otherwise you should consider. I hope you are following this. First condition, dash loss, partial loss. Second condition, mentioned in the agreement. Third condition, it should be dash. It should be under insurance. So 3 condition. All the conditions should be satisfied. One condition. First condition you ask, then it is satisfied now, come to second condition. Not satisfied now, there ends the matter. Straight away, your comparison is dash or dash, whichever is less. So finally, it is dash or dash, whichever is less, or dash into dash by dash. This is the answer. You understand? Finally, answer is what? Dash or dash, whichever is less, or dash into dash by dash. This is the answer. Correct? Now, this dash into dash by dash is called application of average clause. So, a dash or dash, whichever is less, there is no concept of average clause. I hope you are understanding. Correct? Okay. So now, so we are not focusing on when not to apply average clause. We are focusing on when to apply average clause. So if 3 conditions cumulatively satisfied, then you will apply average clause. I hope you are understanding this. So pakka clarity has been established. I will put all this discussion into a proper written form, my dear friends. So we have been discussing this particular concept from the last class onwards, my dear friends. Today the first 25 minutes discussion over. Then the next 25 minutes I was explaining about the claim concept, how to compute the claim, etc. So before I start writing, along with me, you should also write. You should not simply stare at the screen. So you should write also. Before that, once again, giving a shape. You know what is a shape? First thing is that I should focus on preparing a trading account or maybe a statement form to find out stock on the date of fire, not stock lost by fire, stock on the date of fire, stock that existed on the date of fire. I need to tell them, insurance company, this is the stock I had on date of fire. So I need to prove that is the stock. For that I will prepare a dash trading account, memorandum trading account. What is the period of that memorandum trading account? From the beginning of the year in which fire occurred till the date of fire. Like that I prepare. For that, or important information I need to check. GPR given. GPR. What is GPR? Gross profit ratio should be given in the question. If it is given, well and good, I would have started. If it is not given now, then I will not prepare this memorandum trading account. I prepare trading account of previous year. We prepare trading account of previous year and we'll find out the gross profit. We'll find out the gross profit ratio. Then we'll prepare memorandum trading account in which we'll take so many information including gross profit. We'll get closing stock as balancing figure. That stock represents stock on the date of fire. From that we deduct salvage value if any. We deduct salvage value if any. We'll be getting dash. We'll be getting loss of stock. Then this loss of stock need not be the claim. So claim will be dash or dash, whichever is less, or dash into dash by dash, depending upon average clauses applied or not. For applying average clause, 3 conditions should be cumulatively satisfied. What are those 3 conditions? It is once again, last time we are repeating several times. I am not getting bored. Now you should also not get bored, my dear friends. So that's 3 times. 3 conditions. What are 3 conditions? First, it is partly loss, partial loss. Second, it is there in the agreement. Third, that it is under insurance. What do you mean by under insurance? That is also I told you, policy amount is less than loss. Correct? Policy amount is less than the stock on the date of fire. Like that we understood, my dear friends. Let us now put all this into steps. Steps in computation of claim for loss of stock. My dear friends, steps in computation of claim for loss of stock. Now step number 1. You should definitely write along with me. So step number 1. Step number 1 is computation of gross profit ratio. Now this is purely academical discussions we are making, my dear friends. It's not practically how we develop these 4 steps. I told you logic and all. Now one by one, why we require GPR? Because when we prepare the memorandum trading account, we need GP so that we arrive closing stock as balancing figure. So for that we require GPR, correct? Okay, so listen carefully, my dear friends. In this we have various points. What and all? Various points. GPR may be given. So if GPR is given, consider such gross profit ratio. If it is GPR is given means what? GPR is given the question. Practically, what do you understand by that? The GPR is very much known to the businessman. He only determined the profit margin. So he is very conscious and he knows the margin. Other practically you understand. Theoretically, it is given in the question. GPR is given in the question. Consider such GPR as it is. If GPR of 2 or more period given, if GPR of 2 or more period given, then take average. Even though like our study module have not coined problems based on this and all, but if you come across such a situation, because GPR need not be the same for all the years, my dear friends, so GPR can also be changed. So you may have to consider trend there, or you may have to take this fluctuations in prices now, then you may have to consider the average. So which may be a simple average, which might be a weighted average, depending upon like whatever small theory we have learned at the very lower level. Anyway, that scenario is not there. So question only will indicate what form of average and all. So if there is some keep on increasing, keep on decreasing, now normally we go for the weighted average. If you have fluctuations now, then we go for the simple average. So if GPR of 2 or more period given, then take average then take average gross profit ratio is what we should understand. If gross profit ratio is not given, is not provided, then trading account of previous year. If GPR is not given, then trading account of previous year is prepared, in which gross profit is arrived as balancing figure. Gross profit ratio equal to gross profit by sales into 100. Gross profit by sales into 100. So like that we determine the gross profit ratio. Now listen carefully, my dear friends. Now it is 4th point is actually a connected point to the 3rd step. 3rd step is what? We are preparing trading account of previous year. For example, 2019-20 there was a fire accident and we don't know margin. We don't have records of 19-20, but we have records of 18-19 which is available with somebody else. Why 19-20 not available? Because 19-20 is yet to be completed. Okay, 2021 yet to be completed. So 19-20 completed accounts, financial statement available with so many people. So thereby we'll have that information of previous year. So we'll prepare trading account of previous year. We'll arrive at gross profit and we'll determine the gross profit ratio. Now you might ask, sir, are we having that previous year ratio or current year ratio? If nothing else is mentioned, you should know one thing, that the ratio remains the same for previous year and current year. So these are all again academical implied assumptions. We have something, my dear friends. So if the ratio of previous year is 30%, naturally, unless otherwise provided, we can assume current year also it is same ratio. I hope you are following this. So proceeding further, my dear friends. So gross profit ratio remains the same. Now proceeding further. So we have got previous year ratio, but in the preparation of such trading account, about trading account, that is for finding GPR, you prepare trading account of say 1920, 2021 fire, 1920 trading account we are preparing. So in the preparation of above trading account, effect of abnormal items shall be eliminated. Effect of abnormal item shall be eliminated. You know what happens is that, see, 1920, some goods, all the goods whatever you would have sold may not be a pakka normal goods. Some damaged goods you would have sold, but still you would have sold at a profit margin. The problem is that all the goods not having same margin. Good units at one margin and inferior damaged goods at different margin. So you will have some abnormal goods. But those abnormal goods will affect the normal profit margin. 10 units sold at 10-30% margin, another few units sold at some other margin. But current year, the previous year abnormality should not affect the normal profit margin. So thereby, for the previous year, no doubt, we earned profit from normal goods. We also earned profits from abnormal goods. I am not telling profit from abnormal goods you should not have and all. Accounts, what I am doing is that I want to find out profit margin relating to normal units, good units. So thereby, for the purpose of this chapter, this is not accounts. It is for making some claim to one company. I need to tell them this is what I lost. Further, I should tell this is the profit margin applicable for this year. Adhukku I want only the margin relating to dash goods, good units. But for that, abnormal items effect should be eliminated. Sir, how to eliminate, sir? I am not at all getting the point. No worry. For every statement I am making here, we are going to spend again 30 minutes or so. So we will spend lot of time. We will have lot of problems for all these things. Now, initially, I told you gross profit ratio required to find out gross profit amount of current year. That ratio of current year may be given, take it. Ratio of past few number of years given, then take average. Ratio away not given, then you prepare trading account of previous year. But when you prepare trading account of previous year, in that there are some abnormal items. Then that abnormal item effect should be eliminated. How to eliminate? I will discuss later. All those procedural part will explain later, my dear friends. I hope you are understanding. Now I just told you that you should eliminate the effect of abnormal item. Why to eliminate, you understand. How to eliminate, I have not told you. Why to eliminate? I want the profit margin relating to normal units. I don't want the margin relating to abnormal. Abnormal margin illa. It is not a margin at all. Some goods damaged from somebody coming asking for some price, I will give. Some other damage from some different day, I will sell at some other price. It all depends upon the, see, normal goods, you can have policy based price. Abnormal goods, you can't have a policy price, a situation price. I hope you are understanding. So thereby, so such abnormal items shall be eliminated. But how to eliminate? I have not taught you. Why to eliminate? I have already told you the logic. I hope you understand the logic. So proceeding further, my dear friends. So it is the next point, my dear friends. So I told you that you are preparing trading account of previous year. You are getting previous year gross profit, and using which you are finding gross profit ratio of which year? You found out gross profit ratio of previous year. Now I told you if nothing else is mentioned, previous year ratio is the current year ratio. But there is a possibility that, sir, selling price have increased, cost price have increased. Now nowadays you understand that everyday prices are increasing like anything. So selling price increase, cost price increase. Now, do you mean to say the margin will remain the same? So your prices are increasing, not necessary. Selling price increase by so much amount, cost price increase by same amount. So when amounts are fluctuating, now do you think the margin will be same? Margin cannot be same. Margin will be different. So when the margin is different, so in that case, how to find out a different margin? That is current year. I know it is not previous year margin. Previous year margin is not current year margin. So how to find out that? Which means effect of price level changes should be determined, should be considered in determining the current year gross profit ratio. Once again I repeat, effect of price level changes. Price level changes should be considered in determining current year gross profit ratio. In current year gross profit ratio. So this is important points, my dear friends. So effect of price level changes should be considered in determining current year gross profit ratio is how you should be understanding the points. So how to consider? Again, why to consider you understand, because margin will not be same, so I have to find out a different margin. How to consider I will teach you later. So there are two things I have to teach you later. What are the two things? Sir, how do you eliminate abnormal items? How do you consider price level changes? That and all I will teach you later. It's not mere accounts. There is only mathematics and common sense involved. I told you, see, it's predominantly maths and the addition, subtraction, maths and that much only, and common sense application. So those common sense application I will make it later. It's very interesting areas. We'll solve some high quality problems, then we will solve it later. So far I have done step number 1. The moment you read the problem, you know it is loss of stock. Search for ratio. Search the question for gross profit ratio. Given, sir, Abba, step number 1 over. Consider same GPR. Sir, GPR 2, 3 GPR given. Take average. Sir, GPR not given, sir. Takkani prepare trading account of previous year. Find out GP. Sir, abnormal item is there. Eliminate. How, sir? Later I will teach you. Sir, prices are not same, sir. Then you should consider the effect also. How to consider, sir? I will teach you later. Why to consider? Because if the prices are different, then margin cannot be different. If nothing is mentioned, you can assume the margin is same for both the years. But the moment prices are differently given in the question, margin is not same. Is how you should understand. I hope you are following. So step number 1 completed. What have you computed? Gross profit ratio. Now listen carefully, my dear friends. You have step 2. Finding stock on date of hire. In fact, this is the core discussion I started, that we need to prove this is the stock I had on date of hire, for which you are going to prepare memorandum trading account. Adala GP is must, adukku ratio must. GP will be sales into GPR. Sales into GPR. Adukku GPR must. That is why step number 1 we identified GPR of previous year, current year, but generally based on previous year. Like that we told you. So step 2, stock on the date of hire. So my dear friends, we are just proceeding with stock on the date of hire. So you prepare what account? Memorandum trading account is prepared. Trading account is prepared for the period commencing from beginning of the year in which fire occurred till the date of hire. And the following items: opening stock. What is the source? Practical, theoretical. Opening stock. What is practical, sir? Practical. So in your real life scenario, not in the examination 8 marks, you are assisting a client to to get this particular claim. That is the practical scenario. You have become a chartered accountant. Theoretical, exam you are sitting and solving the problem. That is theoretical. So that way, my dear friends, opening stock from previous year financial statement, from previous year financial statement available with somebody. So opening stock. Theoretical what? Theoretical concern, it is given in the question. Given in question. Super. So actually no, this much lecture you might feel like waste of time and all. Those students like no always think like step 1, step 2, step 3, step 4. I want to solve directly problems, solution, problem, solution. Spend some time. So spend some quality time when you venture into each and every topic. I am not telling the same time should be spent during the last 3 months before the examination, but when you start one learning, my dear friends, this spending will really helpful. This is a way in which you learn, and this if you get accustomed to, CA final also will be easy. The methodology of learning is going to be very, very important. Straight away final also. Problem, solution, 4 steps, problem, solution. Like that we can't. So at some stage you will have serious trouble. So try to understand like why we do all these things, etc. So that way, opening stock. Now we have purchases. Practically you find that from creditors, suppliers, from bank statement, like that you will arrive at the purchase information. Theoretically what? Given in the question. Given. Sales. Customers. Bank statement. I am telling source. Practical, what is the source? Theoretical, given in question. Direct expenses. Either it is through bank statement or estimated as a percentage of purchases. Direct expense nale expenses attributable to purchases, expenses attributable to manufacturing. So that way, estimate as a percentage of purchases, either bank statement or estimated as a percentage of purchases. Again, it is given. So why these things we will not discuss now. Then suddenly a student will think how I will estimate and all. So you should not correctly distinguish. When you're learning only practical, this is the way I do. But examination, I don't have chance to do all these things. So thereby it will be given in the question. So we have opening stock, purchase, sales, direct expense, gross profit. Both the places, it is sales into gross profit ratio as we have determined in step number 1. So that way we get the gross profit. So sales we already determined. So sales into gross profit ratio as we have determined in step number 1. So that the closing stock, that is stock on the date of hire, will be arrived as balancing figure. So that way you are understanding my different closing stock, that is stock on the date of hire, will be arrived as balancing figure. So we got pakka understanding about how to find out stock on the date of hire. So only for your again future references and all, so reading and all, detailed notes I am writing, my dear friends. So I hope you would have written along with me. If you have not written also, so far if you want to write these things, I'm just showing the slide. Usually after completion I show, maybe okay, after completion what I do, I will show like this slide. I will wait for 2 seconds. So 2 seconds can I copy and no? 2 seconds what you can do now, this frame is there in your system, you stop it, copy it, then resume it. Like that I will show different frames, my dear friends. Now let me complete to remaining steps also. So what have we computed so far? Stock on the date of hire. Now proceeding to step 3. Step 3 we will be computing, my dear friends, loss of stock. Okay, loss of stock. So what is this loss of stock? It is stock on the date of hire. Loss of stock equal to SK na stock. Slowly you will get accustomed. So SK stock. So CSK means Chennai Super Kings illa. So it is a closing stock, like that you will be understanding, my dear friends. So loss of stock is equal to stock on the date of fire, which means what? This is the stock I had on the date of fire minus salvage value retained extra word I am adding. So salvage value retained, salvage value retained is what we are adding, my dear friends. So listen, loss of stock equal to stock on the date of fire minus salvage value retained. Now what is this salvage value retained? Say, for example, stock on date of fire, say 3 lakhs, salvage value 50,000, salvage value 50,000, 20% of salvaged stock given to insurance company, 20% of salvage stock given to insurance company, like this information given. So which means what na? Though I saved 50,000, though I saved how much? 50,000, 20%. What is 20% of 50,000? 10,000 rupees. Calculator we can verify. Otherwise, simple you should be knowing by this time. 50,000 la 10% na 5,000. One more take 20% na 10,000. Like that. Overall also you should be in a position to calculate few things. Some students and all there. 50,000 plus 10,000 how much? Sir, calculator sir. 50 plus 10, 60. 3 zeros automatically it should come naturally. So like that, everything don't be over dependent on calculator. Only request was not to use mobile. That's all. Okay. So coming back to this, my dear friends. So thereby 20% was returned back to insurance company. So how much was given to insurance company? 10,000. So which means what is still there in the shop? How much we had before fire? 3 lakhs. Then after fire, how much we had? 50,000. Other 10,000 was given to insurance company. So how much ultimately we have? 40,000. That is what we call as salvage value retained. So which means how much I have lost na? It is, so loss of stock is equal to 3 lakhs minus 40,000. 3 lakhs minus 40,000. It will be how much? 2,60,000 is what I have lost. What I have lost. For this only, I expect a compensation from insurance company. For this 2,60,000, I expect compensation from insurance company. What is this 40,000? 40,000 is nothing but 50,000 minus 10,000. So how do you got 40,000? 40,000 is nothing but I saved 50,000. No. In that, how much I gave to insurance company? 20%, so 10,000. So that is how I computed this 40,000. What is 40,000? Salvage value retained. What is 40,000? Salvage value retained. What is that? I hold it after fire accident. So which means balance and all I have lost. I hope you are understanding. So when I calculate like this, after solving like this one question, anyway we are going to solve it. FAQ will come. So many students one by one will ask the same question. 20-30 times I will explain same thing only. So what they will ask na? Sir, you gave 10,000 to insurance company. Correct sir. Who businessman after saving that 10,000 was given to insurance company. Upon the 10,000 will insurance company give money or not? You need to check. So we gave the 10,000 stock to insurance company. There are two questions will come. First, why you should give stock to insurance company? Number two, when you give the stock to insurance company, should they give money to you for that 10,000 also? We need money for 10,000? Yes, it's my stock. I purchased stock. Other than I gave it to insurance company. I want money or not? I definitely want money. Yes, super sir. Now you are trapped sir. Like that students will come. If you want money from insurance company, why don't you add that 10,000 also? Like that students used to ask. Please understand, my dear friends. Some students, the doubt will come. 260 la 10,000 is included. When I tell this, some students will tell, no, sir, you didn't add only and you are telling 260 includes 10,000. Isn't a black magic? So you need to be very, really, some set of students will get that doubt. So now, having taken this many years, now why this online can be successful is because of this experience. Now we know every doubt that a student can potentially ask. So they will come and ask, sir, do you expect money for 10,000? Yes, sir. So the students will question me like that. Okay, you want 10,000 rupees money? No, sir. Then you add this. No, pa. I will tell 260 includes 10,000. Sir, how is that 10,000 will be included? You should add, no, sir. When will you include something, sir? By adding, no, sir. Please understand, pa. This 3 lakhs, the 10,000 is there or not there? The 3 lakhs, the 3 lakhs, the total stock I had on date of hire. Correct, pa? Now, in the 3 lakhs, I saved how much? 50,000. I saved 50,000. Apo I deduct 50,000. Apo because of fire, how much I have lost? Because of fire, how much I have lost? Destroyed by fire, how much? 2,50,000 was destroyed by fire. 2,50,000 was destroyed by fire. This much only I lost by fire, pa. Now 50,000 I didn't lost, but I gave it to whom? Insurance company. How much? 10,000. So adu I want money. I want money for two things. What are the two things? The amount which the stock which I really lost by fire. The 10,000 which is taken by the insurance company, for both I want money, pa. Correct? Which is how much totally? 2 lakhs. This is what we told, sir. You should add. That's correct, pa. See, listen carefully. Appo, the same 260 I have arrived here. How I arrived? I have taken this 40,000 as the salvage value what I have. So by taking 40,000 as salvage value, the remaining 260 includes two things. What are the two things it is included? The stock destroyed by fire as well as the stock that was given to insurance company. So once again I repeat, my dear friends, 3 lakhs by deducting the salvage value retained, not the total salvage stock, by deducting the salvage value retained. The balancing figure will consist of two components. Which are the two components? Stock destroyed by fire as well as the stock which is handed over to insurance company. I need not make a separate addition. You believe that 10,000 is included only by addition. If you believe, do like this. What? 3 lakhs minus 50, 250. Then I gave to insurance company 10. Then 250 plus 10, 260. Like that you arrive, my dear friends. So in that case, two steps you should calculate loss of stock. What are the two steps? Stock on date of fire minus salvage value. We call it stock destroyed by fire. Stock destroyed by fire. Then to that you will add stock given to insurance company. So that way when you add these two, you will be getting loss of stock. I hope you are following this. What is 2,50,000 is called? 2,50,000 is called stock destroyed by fire. What is 10,000 is called? 10,000 is called stock given to insurance company out of the savings. So you saved 50,000, no, otherly you gave 10,000 insurance company, which means you want money for that also. That way totally you need totally how much? 2,60,000, which you can directly arrive. How? From 3 lakhs deduct salvage value retained. So what do you mean by salvage value retained? Salvage value retained is nothing but total salvage value minus whatever you have given to insurance company is called salvage value retained. I hope you understand the meaning of salvage value retained. I hope you are following. So if you are comfortable with this two-step approach to find out loss of stock, no problem. In every problem it won't come like this, because there is another question which I have not answered it to you. You know which question I have not answered to you? Sir, why do you want to give the stock to the insurance company? There are several reasons for it. Sometimes, some stock they want to test in their lab. Some part of the stock they want to test in the lab to understand the cause for the fire accident. So sometimes what happened, see, the people know the debt-ridden people, for want of liquidity, they find that they bought the stock thinking that they can sell overnight within 2 weeks in an export contract. An export contract would have been cancelled. I feel that the stock now suddenly I can't sell. Slow I may sell in the domestic market. I have insured, no. What I will do, I will plan for a fire accident. Fire accident not coming naturally. So what I will do as a businessman, they will manipulate. There are several cases against the business people who create fire accident and take money from insurance company, my dear friends. So thereby, the insurance company take the goods and test it in the labs, not directly owned by them, take the help of experts, test the reason for fire. I hope you are following this. That could be one of the reason. There could be another reason, my dear friends. Another reason is that you have saved stock rupees 50,000. Now this stock which was saved is not necessary it is saved in a pakka good condition. Slightly would have been damaged. Whatever goods that has been saved is not in a pakka good condition. They may have been slightly damaged. You want money, not only those stock which has been burnt into ashes, you want money for the damages also, correct? You want money for the damages also. The remaining goods should be fixed to some value. Whatever saved can't have the same cost to price. You may fix a value for it in the damaged condition, correct?
Yes, sir.
But insurance company says that now you want to fix a value, it can't be the original cost to price. Insurance company says that this is the value. We are telling no, this is the value. I hope you are understanding this. So insurance company says that the goods that you have saved is having a value of 75,000. So we are telling no, it is worth only 50,000. It is worth only 50,000. Insurance company says how much? 75,000. They say 3 lakhs minus 75, 225, then you lost. They are telling. I am telling what? No, I saved only 50. This stock what I saved can fetch me only 50,000. 3 lakhs 50 I saved, you give me 2 lakh 15 I am telling. They say that no, we will give only 2 lakh 25. Some fight will come naturally. What I am telling is, you believe it is worth 75, yeah, take it, take the goods. Take the goods and you recover 75,000 from third parties. And you give me the amount whatever I deserve. So that way, the total goods was how much? 3 lakhs. Total goods was 3 lakhs. You give me total 3 lakhs. I am telling entire goods you take it. I don't want any goods. I saved this much. You are telling it is 75. I am telling only 50,000. Now we have difference in value. Now what do? Take the entire goods with you. And you try to realize it. So I had 3 lakhs. Let me assume entire 3 lakhs I have lost. Let me take it as if I have lost entire 3 lakhs. You give me 3 lakhs. You only believed you can recover how much? 75. You recover from outsiders. So then you are having an outflow of only 2 lakh 25. You wanted to give me only 225, correct? What do? You give me 3 lakhs and recover how much from outsiders? 75,000. Whatever you believed you can recover. Correct, Appa? You only told you can recover 75,000. No. Appa, you give me 3 lakhs, pa, and you recover 75. So according to you, 2 lakh 25. Correct, Appa? Or you don't want to take the goods now, then I have fixed a value for the goods which is only 50,000 rupees. I hope you are following this. So there will be a difference in the valuation and all. So then I will take the goods with you. You try to recover. Understood? There are different reasons and factors why insurance company take the goods which has been saved. I hope you are understanding. So we want recovery for both the goods. So actually how much I have lost? 2 lakh 50 by fire. Correct? 3 lakhs I had. How much I destroyed by fire? I mean how much I saved? 50,000 according to me. So how much I destroyed by fire? How much I lost by fire? 2 lakh 50. In the 50,000 I feel I can recover from customers. You give me 250 so that I can recover totally 3 lakhs. You are telling 75 now, then you take the goods, give me total 3 lakhs. You recover. Understood? So like that only we are telling. So I hope you are understanding, my dear friends. So it is, we have told you now 2 things. I mean explaining for the last 20 to 30 minutes. No books contains, it is only like one of the adjustment in one of the problem. Nobody tried to take efforts to explain this particular area, my dear friends. So we are spending so much of time. Conceptual discussion, the conceptual understanding is very much the need. So if this is the way you try to understand every topic, then I'm telling you, I'm sure 80 plus in accounts is definitely possible. So by listening to the lecture, by following everything what we tell you, solve the problem on your own. If you take efforts, this is highly sufficient. Okay, so we are going at that particular pace only. Proceeding, coming back to this. So we are computing loss of stock. What is loss of stock? Stock on date of hire minus salvage value retained. Stock on date of fire minus salvage value retained. So what do you mean by salvage value retained? Salvage value retained means total salvage value minus those goods what you already given to insurance company. Common sense, pa. Salvage value retained means what? Whatever goods I saved and still it is there with me, which means I have not given to insurance company. So total stock saved minus whatever stock I gave to insurance company is what we call the salvage value retained. So that way you should deduct. Or what you can do now, two-step you can do. What is that? So stock on date of hire minus salvage value. If you do, you get amount 2,50,000. What is this 2,50,000 called? Stock destroyed by fire. Then you add one more amount also. What is that amount you should be adding? Stock retained? No, those stock which you have given to insurance company. Adukku you want money. So that way you will be getting 2,60,000. In either form you can calculate. I hope you are understanding. But after me doing like this, one more time you are wanting me to add 10,000. It won't happen because in the 14 50 minus 10, which means minus of 50 minus 10 plus 10 is already made. You should be knowing. I hope you are following. Okay, this is loss of stock. So much of time I spent. I explained you two things. One, why I should give stock to whom? Insurance company. And if I gave, what is my loss of stock is what I have taught you. Understood? But later on, don't ask you, sir, what you gave to insurance company should be added. In the 260, that amount is included or not included? Included. You should be knowing. Why it is included? Because 3 lakhs is included. 3 lakhs included. 40,000 is purely stock, it is with me. But remaining 260 I have both goods lost by fire as well as goods given to the insurance company. Both are included. That's all. I hope you are understanding. Proceeding further to the claim. Compute step number 4. Is it destroyed by fire? Is given to insurance company. This is total. Like that we can take. Destroyed, given to insurance company, total. Step number 4, claim. My dear friends, as far as step number 4 is concerned, how to compute the claim? As I told you previously, you need to check it is I just draw or I will explain like how it is provided in the module. Later on you can refer, because suddenly when you refer study module, so this is given in another type, no, like that you may ask. So thereby it is complete loss, partial loss. Complete loss and partial loss. If it is complete loss, now actually average class 3 conditions are there. Correct? What are 3 conditions? Partial loss mentioned in the agreement, under insurance. 3 conditions. Appo adala first complete loss, partial loss. Complete loss nale straight away you can understand it is policy amount or loss, whichever is less. Like that you can take. Now partial loss, my dear friends. Partial loss it is mentioned in policy. Average clause mentioned in policy. Average clause mentioned in policy. average clause not mentioned in policy. If average clause is mentioned in policy, if average clause is mentioned in policy, listen carefully my dear friends, then how much is the loss? You need to, how to compute the claim? We are computing the claim here. If average clause is mentioned in the policy, average clause not mentioned in the policy, here also same thing pa. Average clause not mentioned in the policy. What is that? It is policy amount or loss, whichever is less, whichever is less. If only three conditions pa. What are three conditions? Complete loss, policy, average clause mentioned in the agreement, then under insurance. If three conditions cumulatively satisfied, now we will apply one proportion. Otherwise, always we will apply the same formula. Throughout we are applying same formula. What is that? Policy amount or loss, whichever is less. Actually, these many branches are there, but we can shrink it to two. What is that? We will apply average clause, we will not apply average clause. So that way we can create the scenario. When we will apply average clause? Three conditions. What are three conditions? Complete loss or partial loss? Partial loss. Mentioned or not mentioned? Mentioned in the agreement. That average clause is there. Third, under insurance. Ipo average clause is mentioned. About two situations possible. What are the two situations possible? Underinsured, not underinsured. I won't say overinsured. Why? Because this will have two different scenarios. Equal insurance or overinsurance also possible. So thereby I am writing as underinsured, not underinsured. So what do you mean by underinsured? What do you mean by underinsured? Policy amount is less than stock on date of hire. This is what we call as underinsurance. Appo claim is equal to, what is claim? Claim is equal to loss of stock into policy amount divided by stock on date of hire. Not underinsured. Not underinsured. So which means if it is not underinsured, then how much will be the claim na? Actual loss. Actual loss. So there you need not say that policy amount or loss or whichever is less and all, because we know it is not underinsured. No. When it is not underinsured, so definitely and the loss will be less than the policy amount. I hope you are following. So thereby we can directly say it is actual loss. So anyway, so coming back to the scenario, my dear friends, if you apply also you will be getting whichever is less. You can apply same principle, policy amount or loss, whichever is less. You will get still the same answer, only actual loss answer. Because definitely in this scenario, policy amount will be more. I hope you are understanding. So no confusions pa. This particular area, without confusion, how to understand claim? Claim is very simple pa. After computing loss of stock, you check, is it complete loss or partial loss? The moment it is complete loss na, straight away dash or dash whichever is less. Correct? The moment you know it is partial loss na, check one more question. What is that? The average class mentioned in the agreement or not? You know, 99% nothing will be given. It will be silent. And the point alone silent. But what you should assume? It is mentioned in agreement. But you need to check only one more point. It is dash or dash. It is underinsured or not. If it is underinsured, then you will apply this particular formula. If it is not underinsured, it will be equal to the actual loss. Like that you should be understanding. I hope you are following. If it is complete loss, all these things you will not check it. Directly dash or dash whichever is less. So policy amount or loss of stock, whichever is less, like that you will understand. If it is dash loss, complete loss. How do you know it is complete loss? Complete loss is salvage value is dash, nil. If there is no salvage value, it means it is dash, complete loss. Complete loss, directly claim is equal to dash or dash, whichever is less. Policy amount or loss, whichever is less. I hope you are following. So if the question specifically says that even though it is partial loss, but question says this policy there is no mentioning about average class, then you straight away go for the same formula application. What formula application? Policy amount or loss, whichever is less. Like that you should be understanding. I hope you are following. Yes, but if the question is silent na, then what will be your understanding? Average class is mentioned. Doesn't mean you will apply the formula. Average class is mentioned. Now to apply the formula, you need to check whether it is dash or dash, underinsured or not. I hope you are following this. So these are the things that you should be knowing. Now few other doubts that will come to the students is that, sir, I have taken policy on one date and on the date of fire stock will be something different, sir. Stock value will be something different. So how can I ensure that I am not underinsuring? How can I ensure that I take insurance? I don't know when fire will happen. No. Correct, appa? So please understand, my dear friends. So like this schoolish type of doubts will come. Foolish la, schoolish. In the sense, only when you connect to the businessman, then you will understand that every businessman will be knowing their stock levels. Or small provision store or a big supermarket, they know their stock levels. So this item, this many units should be there, it is already prefixed and decided. Understood? It is not like, without any structure and all they are doing business. Even if you find, not a very big organization, the moment or normal provision store, Mallikada, you go and the moment they feel like this item come to that level, now immediately they will note in their paper that this should be ordered. So thereby there is a stock level for every item. Based on the maximum expected stock level, you are expected to take the policy. I hope you are following this. In your shop, for the maximum stock level, you are expected to take the policy. So that is how we are expecting you to take this policy. So thereby you should not think that, sir, this day it is 5 lakh stock, next day 6 lakh stock, next day 450. Most of the times the stock level will be replenished. Pharmacist in the medical shop, the moment the medicine over, immediately they have a reordering level. The moment they find only one strip, then immediately they will bring it to that particular level. So thereby stock level, they should be considering, they should be knowing it, they should be aware of the stock level, and they should be having that, but they should have taken the policy accordingly. Some students will ask like, sir, when I took the policy, I took policy for 1000 units. But after some number of months, my demand for the goods increased, so thereby I am maintaining more stock. Then you should have went to the insurance company and paid additional premium to cover for the additional stock. You can't simply tell that no, later on my stock increased, so thereby I didn't insure. If you don't insure, what? We will apply average class. I hope you are following this. So thereby you should not simply like or a school person telling reason, sir, I thought like this and all. You can't tell. Every businessman should be knowing their maximum stock level. Accordingly, they should have taken the insurance policy. So you should not like a school boy will ask, how do I know how much stock I will have on date of fire? Based on that, how I will take policy? You should be knowing. Don't talk like a school boy. Talk like a businessman who knows the stock level. I hope you are following this. So now think in a very wider way, because sometimes few things we are not we could not be only digest, because we think like that 18-year kid, 19-year-old, without thinking from the business angle. So when you think like that, definitely you will be getting the answer, my dear friends. So you have a stock level. When your stock level has increased, it is your duty to go to the insurance company, update that additional stock level and pay the extra premium. We are not telling like for 3 lakhs you are paying 3 lakhs. You might pay additional like 3 lakh stock you have insured. Additionally 1 lakh insured. Now maybe additionally is like hardly 500 rupees, 600 rupees premium. But if you fail to pay, then only we are telling it is under insurance, and if it is under insurance, we will apply average clause. And that too only if the average clause concept is mentioned in the agreement. I hope you are following this. So it is not that the moment it is under insurance, average clause will be applied. But this is a practical concept. Theoretically, the moment you find the moment you find under insurance, we will apply average clause. Why? Because we always presume that the policy contains the dash clause. average class. I hope you are following this. So practically you need to check whether the agreement has the condition of dash. Average clause is there or not. But theoretically, the moment you know it is under insurance, you will apply average clause because you are assuming that the policy contains average clause condition. Do you understand this? Because many students are absolutely confused with the chart that has been presented upfront in the first 2 pages of the study module. Now that I hope you will get a better understanding. It's always better that you also go through the study module simultaneously. Once this lecture is over, maybe take some time. So some students will ask, sir, they have given fire meaning and all. Then don't try to understand more about technical aspects and all, my dear friends. Fire includes the earthquake. Sir, this is fire or not? So what is this particular blasting of certain units, etc. Like that, you need not go into those technical aspects. But the conceptual part, my dear friends, so to that extent, understanding the conceptual part, we can always refer simultaneously the study module. So this is how we are understanding about computation of claim. I hope you are following. So step number 4, claim. Step number 4 is claim after computing loss of stock. So you need to check what it is, complete loss or partial loss. Complete loss na straight away formula. What is it? Policy amount or loss of stock, whichever is less. Because there, even if you apply average clause, you will get the same result I told. Correct? Partial loss. The moment it is partial loss, you need to check it is underinsured or not. That's all. You need to check. For theoretical purpose, you need to check only that. Correct? Yes. But you may have, like this, never a scenario have come, but you may find a scenario where it is clearly mentioned in the agreement that this policy does not contain dash. Appo, even if it is under insurance, you will not apply average clause. I hope you are following this. So which means a very remote possibility in a question paper, but it can also be possible. That is what we have completed, my dear friends. So I will show the different frames here for copying. Let me show different frames here for copying. Steps in computation of claim for loss of stock. So this is frame number 1. 1, 2, you stopped, you copied, resume. Frame number 2 for copying. Okay. Frame number 3 for copying. Okay. Okay, so this is how we explained all this concept, my dear friends. Having completed this concept, now what I will do is that we will take a few problems for solving, my dear friends. And I told you, actually the discussion is not yet over completely, because in the step number 1 only you have so many things to be discussed. So those things I will take it later, my dear friend. For every point given, we will solve problem, we will explain the concept, etc. Now that we got overall view, once again you have to respond here. What is step number 1? GPR. What is step 2? Stock on date of fire. What is step 3? Loss of stock. What is step 4? Claim. So once again, 1. GPR. 2. Stock on date of fire. 3. Loss of stock. 4. Claim. Okay. Now this 4 step little elaborately one time. Little elaborately. GPR. GPR given the question. Take it as it is. 2 or more GPR given. Take average. GPRA not given. Prepare trading account of previous year in which you will have gross profit. You find that ratio which is GP by sales into 100. In the trading account, abnormal items there, eliminate. Sir, prices are different. Then consider the price level changes. How to do it, sir? Later I will discuss. Like that we completed step number 1. We got GPR. Step 2, prepare memorandum trading account to find out stock on date of fire. Visualize. Opening stock, given in the question, purchases, given in the question, sales, given in the question, direct expenses, given in the question, GP amount, given the question illa. Sales into GPR. Step number 1 amount, you get the amount. Dash is balancing figure. Stock on the date of fire is balancing figure. Step 3, loss of stock. Loss of stock is equal to stock on date of fire minus salvage value retained. How much I still have? It's not what I saved. After savings, if I have given something to insurance company, what do I still have is what we call a salvage value retained. That is what loss of stock. Correct? Okay. Then step number 4, claim. Check whether it's dash loss or dash loss. Complete loss or partial. How do I know? If salvage value is nil, it is complete loss. If salvage value is some amount, it is partial loss. Correct? So if it is complete loss, claim is equal to dash or dash, whichever is less. Policy amount or stock on date, loss of stock, whichever is less. If it is partial loss, then you need to check whether average clause is mentioned, average clause not mentioned. This is practical, we should see. Theoretically, we always presume it is mentioned. So straight away we will go to the next question. It is dash insurance or dash insurance. Under insurance or not. Under insurance, if it is under insurance, if it is already mentioned in the agreement about average clause, we will apply average clause. How? Loss of stock into policy amount divided by stock on date of fire. Suppose we can't apply average clause now, then it is policy amount or loss of stock, whichever is less. Like that we can arrive at the answer. I hope you are following. So this is how we have concluded my defense. So very elaborate discussion. Takku what we will do now? Problem solving. So we'll take now question number 1. Question number 1, page number 1. So second lecture, last 30 minutes we are coming to problem. This is what we used to do in the face-to-face also. But there so many witty stories will happen because we can spend some time here with the video. I don't know what sort of interaction. See, front roller, some person will be seated. So we'll do some interaction, some funny interaction, so which couldn't be done. We'll try to do that also. We'll presume that like how you are presuming, I will also assume that you are sitting. I will ask you some questions, etc. Anyway, let us now proceed into the question number 1. I will tell you what happens in a face-to-face lecture. Question number 1, I will ask the students to read. Then I will ask them to answer all the questions. Answer all the 7 questions. A, B, C, D, E, F, G. The question is what? Compute claim for loss of stock in each of the following cases. Rupees are in thousands given. So these are all rupees in thousands. Compute claim for loss of stock in each of the following cases. So like that 7 cases given. Stock on date of fire. Stock on date of fire means what? Answer to step 2 is there. Stock on date of fire is nothing but what? Answer to step 2. Salvage value given. Policy amount given. So you are asked to compute claim na. Appo 4 steps illa. Here straight away answer to step 2 given. Appo you need to work out only dash steps. Last 2 steps. Third step and 4th step. What is third step? Third step will be loss of stock. Third step is loss of stock. Stock on date fire minus salvage value. Like that you will get loss of stock. Then 4th step. As far as 4th step is concerned, claim. Claim is you may apply this average clause, you may not apply average clause. Like that you should be computing the claim amount. I hope you are following this. So I want the student to solve the problem. So in the face-to-face lecture again we'll give 15 minutes time for you to solve. Katagana 7 questions. They will solve. We'll exchange the paper and we make the correction. Very first question we are solving as a test. This is what will happen. First question taken as test only. So it is not that I solve and I am waiting for you will copy, etc. You will solve, I will wait, and then I will solve. So please you solve it. And when you solve it, don't do calculator effect and all, arrive at only final, jot down the answer. Solve it genuinely, in the sense at least for one question you write stock on date of fire minus salvage value, like that you write. Other question directly you can write 200 minus 40, like that you can write, right? So that way I want you to properly write. Don't be cheat, don't be lazy. Online students, So I know genuine people are there. Some students know, even they come to face, I need to shout at them, making them write. The laziness is there in writing, and in spite of being so intelligent, 2-3 times they fail because of not writing, and they will skip the CA course and they go to some other course. So in spite of having ability, and just because of laziness, sheer laziness to write, because they are intelligent. There are intelligent people who can calculate orally. There is some computers in their brain, and because of their sheer intelligence only they fail. So please, my dear friends, use calculator, you write properly. I am giving you 15 minutes time here for you to solve the problem, all the questions. So take that time and you take it. So though I say 15 minutes, I will here wait for 15 seconds, okay? And then I will say welcome after 15 minutes. That is what I will normally do. Keep solving. Okay. So I hope you have completed. Now interchange correction and all may not be possible at when you are hearing it. So thereby what I will do is that I will provide the answer, you correct and provide properly marks. Don't compromise on the correction. First you are taking the role of a student, you wrote the test. Now you are taking the role of an examiner. Think like an examiner. So when you can think in both the roles, slowly, steadily, you know how to present, how to improve your presentation. Whenever you make corrections, no. So slowly what happens, this is what examiner will also expect, that mindset will come. Always knows from student mind, why not you award marks, why not you award marks. When you correct well, you know how can I award marks for this. So dual role you can take, my dear friends. So that way, now you take the role of correction. So I hope you have completed this 15 minutes proceeding. So please, if not, stop the video and complete it. Sir, you wait only for 15 seconds? Yes, which means you have stopped the video, solved all the problems. So please keep solving it, complete all the 7 cases and then wait for the answers. We'll make the corrections, etc. So listen carefully. As far as case A is concerned, I told you, at least for one case I want to write properly. It is loss of stock is equal to throughout it is rupees are in thousands. I am also avoiding those zeros. This is loss of stock. Then we proceed for computing the claim. First of all, we understand it's a partial loss. The moment we have salvage value, it is a partial loss. Policy amount is 250. Policy amount is 250. It is partial loss. It is partial loss. We presume that if nothing else is mentioned, we always presume that the average clause is mentioned in the contract. Average clause is mentioned in the contract, but we need to check whether it is under insurance or not. So thereby it is partial loss. How do we know partial loss? 200 la 40 we saved, 160 lost. Apart the partial loss, 200 we had, 160 the last. Partly we saved, partially we lost. The partial loss. Okay. Now listen carefully, my dear friends. It is underinsured. policy amount of 250, it is not underinsured. Extremely sorry, it is not underinsured. Policy amount of 250 is greater than stock on date of hire of 200. We understand stock on the date of hire is 200. We don't compare with 160 here, we compare with 200 to know whether it is underinsured or not. So thereby, my dear friends, claim is loss of stock. Claim is loss of stock, that is 160. Claim is loss of stock, that is 160. Now if you analyze this, my dear friends, it comes under what branch abdina? First the partial loss. Partial loss la average class is mentioned in, we are assuming. Suppose average class is not mentioned na, then straight away we would have taken policy amount or loss whichever is less, 250 or 160 whichever is less, and still answer would have been 160 da. So here average class mentioned in, we are assuming. Adala underinsured or not underinsured na, it is not underinsured. Not underinsured na, then it is actual loss is the claim. So actual loss how much na? It is 160 is how we are understanding. I hope you are following. So in this given case, my dear friends, the claim will be 160. What is your presumption? It is average clause is mentioned. Average clause is mentioned. But why you didn't apply average clause? Because it is not underinsured. So three conditions should be satisfied. What are the three conditions? It is partial loss, mentioned in agreement, assume pannito. Then third, it should be underinsured for you to apply average class. Here it is not underinsured. I hope you are following this. Proceeding further. This is case A. Case A. So frame number 1 and frame number 2. Case A completed. Proceeding to case B. As far as case B is concerned, direct loss of stock equal to 360 minus 60. 300. Policy amount is 240. Policy amount is 240. We need to compute the claim, no? Claim what and all we understand. First, this is partial loss, partial loss. It is partial loss. Assumed that average clause mentioned in agreement. Just because of it is mentioned in agreement, you should apply average clause. No, because third condition should be satisfied. What is the third condition? Under insurance. Suppose it is not under insurance, you won't apply that particular average clause concept. I hope you are following. So thereby partial loss assumed that average clause mentioned in agreement. Third, it is underinsured. It is underinsured. Therefore, claim is computed as follows. Claim is computed as follows. How? Loss of stock into policy amount divided by stock on date of fire. So listen carefully, my dear friends. 300 into policy amount is 240 divided by 360. So thereby it is 200. So 300 into 240 by 360. So you will be getting claim as 200. So maybe 2 lakhs you can write, because I have given rupees are in thousands, but up at the top I have also written rupees are in thousands. So I have avoided the zeros. So this is frame number 1 for case B. Frame number 2. So that way we have completed 2 cases, my dear friends. So proceeding to the case C. 500, 100, so it is 400. So it is loss of stock equal to 500 minus 100, it is 400. Policy amount is 500. So as far as claim is concerned, first of all it is partial loss. So first condition for average class satisfied, correct? Next, is it underinsured? It is not underinsured. Not underinsured. It is not underinsured. About claim is equal to loss of stock. It is 400. Because here, the moment we know it is not underinsured, you should know one more aspect, that but definitely policy amount will be more than what loss. About directly you can say claim is equal to loss of stock. I hope you are following. So thereby please understand, my dear friends, here we understand it is not underinsured. The moment it is not underinsured, you can easily say that the policy amount will be more. So you need not write policy amount or loss of stock, whichever is less and all. Straight away you can say it is loss of stock. In one of the branch I have written actual loss and I have written. I didn't make comparison, no. So like that you can write directly, my dear friends. I hope you are following. Okay. So here assuming that the average class is mentioned in the agreement. That is why we are just taking this. Suppose this average class is not mentioned, then what we will do? We will directly take up the loss or the policy amount, whichever is less. Like that we would have taken. I hope you are following. So without checking up whether it is underinsured or not underinsured, we will never check underinsured or not underinsured if there is no mentioning about the average class. I hope you are following this. Okay. About proceeding further. In the case C, suppose we assume that average cost is not mentioned in the agreement. Like that we are knowing now. Still here answer will be same. Directly what we would have done now, we would have taken loss or policy amount, whichever is less. 400 or 500, whichever is less. Answer would have been directly 400. Understood? We will not check whether it is underinsured or not. Clear? About first thing you should know whether average class is mentioned or not mentioned. Here we are assuming that average class mentioned or not mentioned? Mentioned. Thereby only we checked whether it is underinsured or not. I hope you are following. Okay. Proceeding to case D. Proceeding to case D. Some insurance company not concerned with this underinsurance or not. So thereby straight away they will tell there is no concept of average class. Like that it would have been clearly provided. Or straight away they will tell average class is applicable. Like that they would have mentioned. So thereby average class is not something automatic application of law. It is separate provision given in the agreement. It is based on the type of policy. I hope you are following this. So very important. All the conditions should be satisfied for applying average class. What are the conditions? Dash loss, partial loss. Average class should be mentioned. Suppose in spite of average class is mentioned, still we didn't apply average class here. Why? Because it is not underinsured. Not underinsured. So all the three conditions should be satisfied for you to apply the average class. I hope you are following. Okay. Suppose, my dear friends, in this case B or answer A, suppose here in the average class is not mentioned in the agreement, what would have been the answer? The case B ki alternative. Suppose in the case B oda, in case B le, if average clause not mentioned, if average class not mentioned, we are least worried about underinsurance or not. straight away dash or dash whichever is less. Exactly. Then policy amount or loss whichever is less. But that is policy amount how much? 240 or 300 whichever is less. But that is 240. So here for the same question answer would have been different. 240. What is our answer? 200. And if nothing else is given in the question, student should definitely arrive at 200 the answer. Understood? But if the question clearly says that average class is not mentioned in the agreement, answer would have been 240. Even though it is underinsured. Correct? Just what is my conclusion? Once again I am reinforcing same point. What? Just because of it is underinsured, not necessary average class should be applied. The one more condition is implied there. What is the one more condition? Average class is mentioned in the agreement we are assuming. Correct? Okay. In the question number 2, you may have two different answers. So depending upon whether average class is mentioned in the agreement, average class not mentioned in the agreement. Clear? Proceeding further. At case CK, whether average class mentioned or average class not mentioned is not giving two different answers. You know why? Because anyway it is not underinsured, so answer will remain the same. I hope you are following this. Average class ku moonu condition irukku. What are the three conditions? Once again, partial loss, mentioned in agreement, underinsured. All the three satisfied na and the proportion order application will come. I hope you are following this. Okay. Now proceeding to case D. Case D, my dear friends. $600, $120, $480. Taken. Loss of stock is equal to 600 minus 120, 480. Policy amount is also 480. That's okay. Now claim. Partial loss or complete loss? Partial loss. Partial loss. Correct? Seri. Now, imagine the average class mentioned. Average class mentioned. Okay. Average class mentioned. Seri. Then we also understand it is, if average class is mentioned, we need to check one more condition. What is the other condition? It is underinsured or not? Is it underinsured? Yes. This 480, this 480. 480, 480. We should never compare policy amount with the loss. We should compare with the stock. So thereby it is underinsured. It is underinsured. Average class or application claim equal to, in such case claim is equal to 480 into 480 by 600. 384 would have been the answer. Correct? Now for the same question, the answer may have been different if box. In the answer we will not give in the in our solution, because this answer we will give only if it is very clearly told that agreement does not have average class provision. What would have been the answer? So my dear friends, if average clause condition not in agreement, then even though it is underinsured, you will not apply average class. That is the point I am telling. Right, Abba? I was repeating several times. At that time confusion come, but by solving this problem you get the clarity. So even though underinsured is there, you may not apply average class. You will simply go with dash or dash whichever is less.
Policy amount or loss of stock whichever is less.
Exactly. So then claim is policy amount or
loss of stock
loss of stock,
whichever is
whichever is less.
less. 480, 480.
So that is 480 or 480. So answer will be 480. So it won't be 384. The average, because why we are not reducing? Because the company does not say anything about the average class. Understood? Sorry. Like that, you may have a different answer when you applied average class, and if that same is not mentioned in the agreement. Correct?
Yes, sir.
Okay. So this is case D. Now proceeding, my dear friends. So case D ki frame வந்து இதான். First frame for copying, the second frame. Stop, copy, resume. Understood? Anyway, this is not two different answers you should provide. I am telling you what if it is separately mentioned. Right? Don't get confused. You two answers. It's going to be very simple. If nothing is mentioned, question is silent. The moment it is under insurance, you will apply average clause. That's all. Because if the question is silent, you are assuming average clause is mentioned in the agreement. Correct? So in the yellow box, answer is required only when question specifically says that agreement does not have average clause. In such problem, even though there is under insurance, but you won't apply average clause. Correct?
Yes, sir.
Okay, super. Proceeding further to case E. Case E. So 800 minus 150. Case E. Loss of stock is equal to 800 minus 150. 650. Policy amount is 720. Big claim. As far as claim is concerned, we understand partial loss. The moment we have salvage value some amount, it is always partial loss. Sorry. And we are assuming what average clause mentioned. Average clause mentioned. Sorry. Now I want to check third condition also. What is the third condition? Underinsured or not. So I find that
Underinsured.
it is underinsured. How, sir, you telling underinsured? 720 is more than 650. So we should not check with the loss bar. We should check with what? Stock on date of hire. This is what you should have the insured. But you took insurance only for 720. That is what underinsurance we are telling. So it is not insurance more than loss. Nobody can predict loss. The only thing what is in your control is the stock that you are holding it. You know how much stock you had. Immediately go to the insurance company and take policy. Understood? Don't underinsure. So underinsured. Appo claim is equal to loss of stock into formula you can write. Okay, maybe loss of stock into policy amount by stock on date of hire. So loss of stock 650 into
720 by 800. 585.
585. 585. Only in this first question I am giving no what if like this, mention like this and all. Henceforth question what is given the question, only one answer I will provide. Understood? Okay, so 585 is the answer. Here once again we will just check it. What if the average clause is not mentioned. If average clause is not mentioned in agreement, then claim is equal to policy amount or loss, whichever is less.
720 or 650.
Policy amount is 720 or 650. That is 650. I am not reducing to 585. So only if the insurance company says no, we will apply average class, we will reduce it. Just because of underinsurance is there, you will not naturally reduce, because the basic concept of insurance is to compensate me the actual loss suffered. Compensate me actual loss suffered. I suffered how much loss? What is my actual? 650. You should give me 650. This is the basic concept. But if they also mentioned about average class, then they will apply average class and they will further reduce it to 585. And that will be the regular answer for us. Understood? So that way we are understanding, we are providing a different answer here only for understanding stage level, but main questions when we go, we will give only one answer depending upon what is exactly given in the question. Here I am assuming it is given, I am assuming it is not mentioned. Average class mentioned in the answer is based on average class mentioned in the agreement. In the yellow box answer is average class not mentioned in the agreement. Like that you should understand, right? Proceeding to case F and case G. So we are just almost coming to the last 10 minutes of our lecture only. So let us quickly complete this. So 2 lectures, only 1 question over. But next lecture, problems we will be solving. Let's find out. So this case F. Case F, my dear friends, it is loss of stock equal to 450 minus nil. Maybe you would have written stock on date of hire minus salvage value, you would have written. So anyway, here salvage value is nil. No. Policy amount is how much? 350. Here what? Complete loss. Complete loss. No, we will not check anything directly. Dash or dash, whichever is less. So here it is what? Complete loss. Suppose claim is policy amount or loss, whichever is less. So that is how much? 350. 450 or 350, whichever is less. Directly 350. Don't apply average class, all this concept and all. All those things will come only in case of partial loss. Be very clear with that. I hope you are following this. Right? Okay. So that way we completed case F, my dear friends. So case F completed. So now just proceeding to case G. Case G. So here also we find that loss of stock equal to 700 minus nil. How much? 700. Policy amount is 750. Suppose claim. When you compute claim, one thing we understood, this is a complete loss. The moment it is complete loss, claim is policy amount or loss, whichever is less. That is 700. So that way you should be arriving at the answer. So complete loss, straight away dash or dash, whichever is less. Partial loss na you need to check average cost mentioned not mentioned. Sir, question silent. What will you assume? Mentioned. If the question is silent, you will assume mentioned. Okay. Then you need to check one more question. What is another question you will check? Is it underinsured or not? Then if it is underinsured, the proportion you will apply. If it is not underinsured, actual loss. Thereafter, no, whichever will say and all. But if average class is not mentioned in the agreement, sir, I know it is partial loss, but average class is not mentioned in the agreement. Straight away dash or dash, whichever is less. Policy amount or loss, whichever is less. I hope you are following this. Okay. So that is how we get a complete clarity about the claim component. I gave you different combinations, etc. So you can also go through, my dear friends. So what I will do is that in our class we will give lot of gift. The term gift means homework. Homework we don't call this gift and all. But anyway, you should solve at your home. We will tell here class at home it is happening. So so enjoy this particular gift, my dear friends. So in our next class, I don't want to take this lectures beyond 2.5. The last class around went to 2 hours 40 minutes, etc. So that way I don't want to tax you much. So the question number 2 is your gift. So before you resume lecture number 3, you have to complete question number 2 and ready with the answer. As well as question number 1 and the yellow box answer you forget it, and other answers you check and see how much you got, and you can pat on yourself a super macha nee samaya pandra Like that you can just motivate yourself. Many times I do in the pandemic environment, we have to draw inspiration from within only. In these tough times you have come like this and all. Like that only you should every day motivate. Different forms of motivation that has to come, my dear friends. So thereby pat on yourself, super. Otherwise you can console also, better like that. You will improve that. So because you would have got only 2 answers correct, 3 answers correct, some would have got 7 answers correct. So you can really appreciate. So first of all, be a better friend to yourself. Talk with you only. Try to understand about you rather than instead of asking 10 different people, sir, tell me what I should do. Tell me what I should do. You try to understand about yourself. Then that will give more success to you. So I'm seriously telling you, my dear friends, it's not joke. Better try to understand about you by you. Then immediately you might remember something. Me in me, understanding me, all these things and all. So it's not like that, but somehow I go for such concept that we have to get a better understanding of ourselves, what I am strong, what I am weak, etc. So accordingly plan for this lectures, etc., my dear friends, and don't depend on too many of external resources. So we'll meet the next lecture. In the next lecture we will start with this question number 3 and we'll solve more problems and few concepts, etc. Maybe another 2 lectures we require to complete loss of stock, and then we will proceed for the loss of profit, my dear friend, right? So thank you, good day. We'll meet in the next lecture, lecture number 3. We'll meet, right?